that too dirty?
There's probably children just hanging out in the living rooms of some of these people, just like, wow, thanks for the warning.
Oh no.
Polluting all the minds of all the small children.
Now, Billy, don't say what you hear on the radio.
All right. Let's go. I think I accidentally started the stream early. So it caught all of that within the first 5 seconds.
Nice.
It caught all of that within easily demonetized. Easily demonetized. That
Turn it off and try again.
I think I might have to. That was hilarious
Yeah.
though.
Turn it back on again.
Yeah.
We're gonna reset this router.
Let's just reset the router. There you go.
Again.
Shaking out the paper ears real quick.
There you go. All right.
Demon on it.
Now we're
That's
on.
hilarious,
All
Dogger.
right. Now we're on. I'll probably just have to like clip the first 20 seconds of the stream and we'll figure it out from there. But anyway. Okay. Hey everybody, how's it going? This is True Demon, the Devil Stockbroker. And I decided to throw this stream up since the due diligence that I did over the weekend on Excela seems to have, I guess, settled in. People seem to like it at just a little bit. Looking at it on the 1-minute chart, we can see Excela has made a move of about, on or about, 14% on the day. So no complaints from me. I'm going to be covering a smaller basket of stocks, focusing more on value plays, especially for the long side, as well as a few short positions, since, you know, the market overall is still in an unhealthy state. And the absolute rip that the SPY had last week on Friday was really unexpected. I know I felt a little bit jaded by the market for that one because after seeing the worst CPI print in 40 years, seeing that inflation is run completely out of control. What other bad data did we get? Oh yeah, 3 different banks are being fined and investigated by the by federal, what is it? Department of Justice, are investigating Morgan Stanley, Bank of America, and J.P. Morgan Chase, all for various forms of fraud and market manipulation. J.P. Morgan, I feel, is the worst of them, which was hilarious. They had traders in their metals market desk that were spoofing trades and caused billions of dollars in gains for J.P. Morgan, but losses for the broader market by spoofing trades. Which, if you're not familiar with that term, spoofing trades is when you place a trade on the order books that you do not intend to execute, and as soon as it actually gets to the point where it is able to be executed, you take it off of the order book. And this is intended to create artificial buying or selling pressure in order to make it seem as though the whatever equity or security or whatever it is experiencing a sell-off or some kind of a bid up. So spoofing trades is a big no-no. And J.P. Morgan Chase is being fined, I think it was, what, $200 million for causing billions and billions in damages. So that's great. It's nice to know that their multi-billion-dollar trades and scam were so severely punished. So much so that they took like, what was it, like a 2% loss on their scam. Man, they pay more in taxes than that fine hit them for. Just absolutely floors me.
Yeah, it's not a fine. It's the cost of doing business. It's just a little bit of dent in the profits.
Exactly. By the way, just so that everybody knows, we're actually streaming this live here in Hell's Trading Floor, so everybody that's part of the trading floor is welcome to come up and speak. Just, make sure you behave yourselves. This is live on YouTube, so if I catch any of you, saying dirty, dirty words, then I'm going to have to just boot you out instantaneously.
Oh shit!
Uh-oh.
Hope everybody else is having a good day, though. If you have any questions, feel free to speak up. No need to be shy. And if you're watching on YouTube and you're not familiar with the Discord, we're Hell's Trading Floor, basically just an education and stock trading community focused on doing due diligence and research to find high value plays. Right now, Excela is the one that's got my attention the most at the moment. Reason being, Excela right now, which is posting a 27.9% gain on the day, the company does basically process automation and payment transaction services. So they're in two interesting spaces. The things that they do for most companies involves basically taking away the tedium of like moving paper around, digitizing documents. Not unlike DocuSign. Somebody asked me if they were a competitor with DocuSign. I don't believe they are, but they do a similar service where they digitize documents. So that's an extremely tedious process that usually has to be done by manual entry scanning, where they literally are like, give us your paper, throw it on a stack, and it just gets just lasered through a scanner, and they digitize everything. And that's not the only thing they do. They do logistics. They do process automation. They'll do development. I think my wife was using the blender. I don't know if that came through.
Discord's noise canceling is amazing.
It is. I'm wondering if it came through on the YouTube channel. It's okay though. It's not a big deal.
It's early in the day.
Yeah. Gotta have nice foamy coffee. That's what that is. Anyway, so Excela, the big prospect that I currently am looking at with them is, well, for one, I guess I'll cover the basics. They're a penny stock right now. Originally they IPO'd at, I believe it was $10. I'll have to go back on their monthly chart just to go find out where they were trading at in the beginning. Oh no, it was much higher than that. So they IPO'd. Oh god, TradingView. So they IPO'd at $30. That was where they IPO'd back in July of 2017. The company was very novel at the time, and they were just getting their business processing and automation services spun up. Another term that is used in the industry for what they do is called digital transformation. It's kind of like an IT service where you digitize an entire company and bring them up into the modern era. I work for a company that does digital transformation as well, in addition to penetration testing services, which is my usual day job. But yeah, digital transformation is a really involved process of getting all of your on-premises infrastructure and all of your manual processes moved up to things like cloud services and introduce business process automation, enterprise resource management. There's a whole bunch of fancy buzzword terms for it, but it's an expensive and a very tedious process. And if you're a a pen and ink business that has never done anything like that before, it takes a lot of effort and there's way too much to learn. You can't really do it on your own. So being able to just hire a company to do it all for you and then just present you with like a digital form of your business is extremely powerful. And what makes Excela sticky in its services is that they manage the infrastructure for their clients and they manage the processes for them. So once they actually bring the business up to date and modernize it, they continue to work with the client in order to continue providing that service. So that's what makes them valuable and makes them sticky, so that once they actually transform their clients' businesses, they hold on to them by managing it on their behalf. And that's a huge benefit to Excela. It's like a very, very good back and forth relationship with their clients. A lot of IT companies that I have worked with have done some form of this in the past. And the name changes all the time, but it's a good business model. It works really well. And the subscription model works with, even Microsoft and Amazon have done this as well. They've adopted this into their own business models. The really profitable part of Excela, though, is their payment processing. So Excela manages deposit transactions for $1 trillion of yearly deposits for the top 10 banks in America. And I thought that was interesting. So I went and I dug into the actual numbers, like, well, how much did they actually make on those transactions? And the number that I came up with ranges between 2 cents to 30 cents per $100 of deposits. When you do the math, that works out to be 0.02 to 0.3%, somewhere in that range. And when you measure that against $1 trillion, that can be between 200 million and $3 billion. So it's quite a range. But at the moment, based on their revenue, they're currently generating $200 million in that arm of their business. So the 0.02% deposit transaction fee seems to match up well. So the lower end of the spectrum. But they're only doing that on $1 trillion, and they're just doing deposit transactions. They also now have a business that they've acquired called Carduro, which is able to do peer-to-peer payment transactions as well. So if you think of like Venmo, Cash App, PayPal, that's the same thing that they're trying to do. And they're trying to develop an app called Excela Pay that will make it possible for people to do one-to-one bank-to-bank transfers. And they'll be able to partner up with other banks that they're already working with in order to replace their existing bank-to-bank transfer system. If you think, like, if you use Chase Bank, they have Zelle or Zelle Pay. Some of them just use regular wire transfers. Anyway, you get the idea. That business has actually got a proposal to buy it from Excela right now for 200. They haven't disclosed what they're offering, but the business that is generating that revenue is generating $200 million of revenue for them right now. So that proposal by itself could pay off all of Excela's debt right now. Just like if they did that, it would pay off all of their short-term liabilities instantly. But they don't actually have to do that right now, because Excela also has a new securitization facility with PNC Bank, one of their partners, that gave them a loan for $150 million that is deferred a bunch of short-term debt to long-term debt and given them a major incentive by refinancing in the form of a $6 million annualized savings on interest. So what I'm getting at is that Excela is finding a bunch of ways to cut down on their expenses for their liabilities and their business costs. They've been slowly dropping revenue slightly, but in return, they have been drastically reducing their expenses, and that's bringing up their earnings per share consistently. So I'll bring up some of the finances to show this. You notice that their earnings are actually improving despite the slightly lowering revenue. Their profit margin is getting tighter and tighter and tighter. So pretty soon they're getting ready to post their first profitable quarter. And if they get to that point sooner rather than later, they said that they would get to that point sometime in 2023. They would post their first profitable quarter. But I think they're actually much closer to that because in addition to that new payment facility that they have with PNC Bank, they also have a deal for $139 million annually through a new partner, and that is a 3-year contract. So every year they get an additional 139 or between 136 and 139 million dollars in revenue gross. And that has not been factored into their balance sheet right now. So looking at all of their financials, and we'll just jump over to the income statement. So their total revenue right now shows TTM of 1.15 billion, which is a little bit lower than their annual on 2021. So far they've posted a 1.15 billion total revenue, and this is not taken into account that new partnership that they've established, which is going to add an additional 30% on top of their current growth year over year. So that's a huge addition onto their gross revenue, as well as dropping their expenses significantly. I think they're going to post a profitable quarter with their next earnings here in August. They've just all those announcements back to back, saving $6 million every single year, getting a new client and adding new contracts, being able to reduce their expenses. I think they're going to post their first profitable quarter in August, and they're actually going to show that they're making money. And that's what all of their shareholders have been waiting for all this time. The only thing with Excela that's really dangerous right now is that they're currently not in the best shape as far as their Nasdaq listing. They have been warned by Nasdaq that they are out of compliance with their listing requirements. Basically, they have to get above $1 for 10 consecutive trading days before August. What is it? August 6th or August 8th? I can't remember. I think it's August 8th. But in order to
It's
actually,
okay.
who said that?
August 8th.
August 8th. Thanks, Scrap Queen. Appreciate it. So yeah, August 8th, they need to have posted their 10th consecutive day trading above $1, or they need to request a extension, which they are allowed to do. They're allowed to appeal for an extension for another 180 days for Nasdaq to give them time to come up with a plan in order to get within listing requirements. So they have time. They just have to actually announce that they have been approved through that appeal process. And most companies get approved for that as long as they have a plan, which they do. They have received shareholder approval to do a reverse split, which I know nobody really likes reverse splits. Everybody sees it as like as a bearish thing because it shows a weakness in the company. But at this point, like there's not really much of a choice. They kind of have to do a reverse split. But if the price of the underlying is able to extend higher and higher before now and then, that will at least enable them to reverse split by a lower ratio. Like right now, as it stands, just to get above listing requirements, they would have to do a 10-to-1 reverse split. But if the price goes up to 50 cents, they could do that same 10-to-1 reverse split, and then the price would suddenly be trading at $5. So that would put them well above their listing requirements in a hurry. The reverse split, I don't feel, is nearly as severe as what people have been making it out to be. My main reason for saying that is that the company has already been preparing to issue buybacks of stock, which is a little bit more enticing for me. They already did a big buyback of stock in order to issue their Class B preferred shares. I believe it was a $100 million deal to purchase shares at a $1.25 price in order to convert shares of Class A stock into Class B preferred stock. So the company paid investors their shareholders to basically give them stock in order to return to them a preferred stock, and that's Excela P. And when I compare the charts of Excela P against Excela's Class A stock, I saw that while Excela was selling off, Excela P was ripping the whole time. So that tells me that investors are still very bullish on Excela despite the drop on their Class A common stock. And if the Class A, the underlying, were to continue to go up, you see the divergence here. Excela P is the candles, and this is Excela's Class A stock here in the this absolutely ugly shit brown color that I'm going to change immediately. There we go. So Class B shares continued ripping. The Class A was selling off. Don't know why. That's a divergence that you don't normally see. So their Class B stock is going up the whole time and challenging their freshly made 200 hourly moving average. So in any case, what this is telling me is that there are investors that are pouring money into the Class B common stock, most likely because this one is not at risk for a reverse split. It's a brand new issued stock. And the equity here is, air quotes, safer. But the Class A stock is so cheap, and all they have to do is just tell Nasdaq, hey, we have a new plan. We just need like 180 more days to put it into effect, and we'll get above listing requirements. And Nasdaq will just be like, okay, like they do with every other company. And they have options, right? So Excela has 2 options for getting above listing requirements, at least as far as what they can do as a company in order to satisfy those listing requirements. The first option is they can do the obvious thing, which is a reverse split. And reverse splits are seen as weakness, which is not good for most companies. They don't. Shareholders don't like reverse splits because it reduces, while it does reduce the float, it also reduces their own, it shows a lack of confidence. But in terms of like the company's market cap, it doesn't change. The market cap doesn't change in a reverse split. It's not like a dividend. It doesn't issue stock. It doesn't take away stock. It just reduces the float and increases the listing price in order to bring it within listing requirements. The only reason why it's seen negatively is that it's seen as, weakness in the stock price, which honestly, like Excela is trading at, well, currently 12 cents, 12.40 cents. So like the stock's already at a weak price. Like everybody can see that. You don't need to be told that just because they do a reverse split. But the other option that Excela has is that they can buy back stock and take it out of circulation. Can they do this? Well, as a matter of fact, they can. So Excela has a market cap of, before today, it had a market cap of $44 million. And that was because the shares were trading at less than 10 cents a share. So Excela trading at less than 10 cents a share meant that their market cap, their entire company's worth, basically, according to the stock market, by multiplying its closing share price against its outstanding float, came to $44 million. Excela actually has enough cash on hand to buy itself back twice at that price. Now, the share price probably wouldn't stay there if they started buying it out of the market like crazy like that, but that's the point, right? That would lift the share price, and that would show confidence that would do 2 things. It would show, one, that the company is confident in its ability to sustain operations and continue operating with enough cash on hand that they feel like investing within their own equity. So if the company starts buying back its own equity, that is bullish, but it also directly lifts the share price by them doing so. And that's actually what I wonder if that is part of their plan, is to both buy back stock and issue a reverse split. So if they were to do them in any particular order, I would imagine they would do the reverse split first, and allow that that negative hit to happen to the company first, because the sentiment would be, oh, they're weak and they have to reverse split in order to stay on the list and stay on Nasdaq. That sucks. Blah blah blah, and they'll just all the bears will leap on it like they always do. But the company immediately can jump in after the price drops, and they have enough cash that they could hold their own share price up easily. They have more than $80 million in cash on hand as of last quarter. And I think that after they post this quarter's earnings, it's going to look a lot better. So it all depends on what the leadership decides to do at the moment. But as far as I can tell, Excela has a strong position to actually start buying back stock sooner rather than later, and that would be the best option for the company, I think. So let me go pull their financials back up really quickly just to prove that I'm not just making this up. If you go look at their balance sheet, you look at total assets and see cash and short-term investments, you'll see that on the quarterly, they have cash and short-term investments. Quarterly, as of Q1 2022, they had $81.97 million. So rounded up $82 million. So that's enough cash on hand that they would be able to buy back the entire market cap of their company twice as of Friday's close. No longer the case now, since currently it's being bid up. But still, that's a good situation for the company. And it kind of shows a little bit of like a divergence of logic, because the company's market cap being less than the cash it's holding in its bank account really shows like a detachment from its valuation versus what the stock is actually trading at. The fact that the company is holding on to more cash than its market cap is currently set at, that should tell you that it's undervalued just on its face. Is there any way to see if the company is buying up shares? That's a good question. So the company, in order to actually start buying shares, they have to issue an 8K filing in order to provide a definitive statement that they will be buying back stock. And somebody, if you happen to know the exact filing for the official buyback, there's a separate filing that has to be filed in the form of a prospectus. I don't think it's a 424B, but it might be. But in any case, when a company starts to buy back stock, they have to issue SEC filings. So when they start buying back stock, they must make that statement public, and they have to state how many shares they are buying and at what price they are willing to buy at, and that will happen first. They've already done it once, where they offered to purchase $100 million. It was $100 million at a price of 1.25 per share at a time when the stock was actually trading at 40 cents, and the stock barely moved. So I found that extremely interesting, that the stock barely moved and the company was able to buy back 100 million shares with far less than what their offer price was. Hey, what happened to T2 Bio? Nothing. Not as far as I know. There was a bit of a liquidity hunt, but it's still trading. Yeah, it's 14 cents right now. It's in that area of demand that I had called out. The volume kind of fell off at the moment, but it's still okay. Like, I saw that it would get hammered down below. I think I said 14.50, so I was a little bit off. It dropped down to 13 cents in after hours a couple of times, but the lowest that it had gotten during market hours was 13.30, 13 cents, 13.3 cents. So a little bit quite a bit lower than what I had estimated, but it was a penny stock. GMVD, what's going on with the stock? GMVD, the CEO is a liar. I'm just gonna say it. GMVD, that CEO is diluting on people. He did a private offering, and the filing was issued today. The filing was issued today, early morning, and they issued a 6K filing stating that they were doing a private offering of warrant and ordinary stock to what was that company's name? I'm gonna pull up the filing. But he promised he promised to everybody that he had no intention of selling stock, and then not even 2 weeks later he's selling stock. Not even 2 weeks later, he immediately turned around and told and made a private offering. Let me see if I can find it. Yeah, SEC report. Where is this thing? Yep, here it is. Foreign issuer report, 6K filing. Here it is. Armistice Capital. G Medical Innovation Holdings entered into an agreement with Armistice Capital Fund Limited in connection with a private placement of investment in the company's securities, including ordinary warrants, which had an exercise price of $5 per share, exercisable immediately upon issuance of the term of 5 years with issuance February warrants. And he technically didn't issue stock, but what he did was he reduced the warrant exercise price and allowed them to exercise them at 84 cents, which they promptly did. I promise you, that is what happened today. They Armistice Capital Fund agreed to exercise $2 million of its existing warrants, which equals warrants to a purchase of 2.38 million of the shares, company's ordinary shares, at a reduced exercise price of 84 cents. They are immediately sellable to the market. He reduced the exercise price so that the company wouldn't bail out on their deal and allowed them to dilute. They gave them a reduced warrant exercise price and they immediately took it. And I bet you that that's what's happening right now. G Medical is selling off because they reduced the warrant exercise price and now it's tanking. Absolutely just cratered. They smashed it. They wanted out. That is what happened. Maybe Hoot Money has a different opinion, but that I look at that action by that company as a fucking lie by that CEO. That was a dirty thing to do. To say in front of everybody on record that there were no plans to dilute this year, and not even 2 weeks later reduces the warrant price on these warrants, reduces the warrant exercise price on over 2 million shares worth of warrants, which is something like a 10% dilution on their stock. Let me go calculate that out because I'm not doing so good with my head math lately. It's a 3.4% dilution. 3.4% dilution, according to their full float. But that is, keep in mind that this float includes all of the shares that are locked up overseas in the Australian markets. But I don't even know if that's true now because that CEO, now that he's done this, I don't trust a thing he says. And I'm not touching GMVD after this. That was the dirtiest thing that he could do, is just lie to everybody on record like that. He made a definitive statement on record, on video, with Hoot Money in his interview that there were no plans to dilute. And then he does this shit. That's a lie. He lied to shareholders. And he's liable for that. He has made himself a target now. Because you can't say that to shareholders. You can't say, we will not dilute this year, and then dilute. You can't do that. But good luck getting a class action against that. But whatever. As I said, I'm not touching GMVD, and that's it. I'll cover a couple of tickers. But I'm not going to go down the list and just cover everybody's tickers all day long. It takes too much out of me covering like 200 tickers in a day. I'm sorry, I just can't keep up with y'all.
Let me know, please.
LMNOP. I'll do AMC. AMC is strong. I love it. It's a nice.
Hey, TD, I know that.
Yeah, what's up?
I know that you mentioned and had talked about AMC yesterday. What about GME? Have you spoken anything about it? I know that we have some realistic expectations for AMC that, $100. I get that. But what about GME? I haven't heard anything about it.
Well, GME and AMC move together for the most part. Now that I look at their stock, though, they've actually diverged a little bit. But for the most part, they move together. The thesis is pretty much the same with both of them. But let's go and compare them side by side. We'll do GME up here. Do AMC down here. And we'll put both of these on the daily. All right. So really similar. Really similar setups. So both of them moved in early March, or I'm sorry, late March. Right after GME's earnings, AMC and GME started moving like crazy. Now, GameStop, with this split as a dividend, I actually see this as an opportunity for GameStop to actually move ahead of AMC and diverge from it. But historically, what we've seen is that these stocks move together. They make all the same moves. This double bottom here is the same as this double bottom here. You have a it's like it in her inverse head and shoulders on this time frame with AMC. GameStop diverged slightly in that it just went on a run. AMC took a little bit more time. Didn't quite run as high. But it was most likely due to GME earnings. And then you had this double bottom here. Literally the same. You just look at the you can look at the time on my cursor. Bottom here on AMC. Bottom here on GME. And then they both moved to the upside and then moved into consolidation. The way it looks to me right now is that GME has been trading in this range of consolidation for a significant period of time and is now touching that resistance. So this is the point where you want to be careful, because if it breaks through, it can run, right? But if it gets rejected, it is most likely coming back down to the bottom of the range at $115. But they're both moving very strongly, so I'm actually I'm quite bullish on both of them.
SPY wants the gap down.
I do want to watch the SPY fall, honestly.
My puts are coming back to life. They were down like 60, 70% earlier. Now they're only down 25. I don't ever do puts, bro. But we talked about it on Friday. I went ahead and snatched up a 374 for the 25th.
You just wanted to participate in just in case Jim Cramer crashed the market, huh?
For real.
Yeah, I saw that he rang the bell today. Look at this. Ooh, look at this. Die, SPY. I heard Pew Pew just screaming that all morning. Die, SPY.
It's finally dying.
Look at it go. Yeah, it broke down below the 15-minute, 50-period moving average.
Yeah, I watched it crash through the 200 EMA on the 5-minute, and that's when I knew.
This is a good setup actually. This breakdown of the 50 is a nice setup. So you can play this for a 2-to-1 risk reward ratio easily. Let's see. Yeah, 2-to-1 risk to reward ratio right now would place you just below the 200 period moving average on the 15-minute chart, but on the 1 hour, your 200 moving average is all the way down there at 382. If this thing bottoms out at 380, that's easily a 2-to-1 trade right there, and you could set your stop loss way up at the top of the wick. At the top of the wick of this current candle on the move down on the 1 hour chart, like that's an easy trade. The MACD crossed down, STC indicator is going red. Let's see. We did tap on overbought, but I don't like to use the RSI that way. I know some people do, so I'm only mentioning it for the sake of those that do use like overbought, oversold signals. The reason why I don't use RSI overbought and oversold signals is because there's no such thing as overbought and oversold. Things can always keep moving up and always keep moving down. Like there's nothing to stop it from going in a particular direction. What you look at, or what I use the RSI for, is figuring out where the movement is going in a sideways market. So if the thing is moving sideways the whole time, you can use the RSI to decide on the direction that it's going to head through. So I actually track when it breaks below the 50 line, and then I treat that as bearish. So when there's consolidation and the RSI is just consolidating with the price, and then you get a break below on the RSI, look, this break below on the RSI predicted this move. You had the strength reverse down, and it broke below the moving average on the RSI. We would call this the signal line. This is how I use the RSI. You got the RSI getting rejected off of its moving average signal line. I have mine set to the 12-period moving average, so whatever day, whatever time frame I'm trading on, the RSI signal line is always set to a 12-period moving average. And I use that in order to track whenever the RSI is bouncing off of or getting rejected by that signal line. And right now, SPY was getting rejected all day long by this moving average. And that lines up with what we're seeing here. You can see that once the SPY got rejected by VWAP for the last time on this candle, this move down here, that was it. It got rejected by VWAP and pushed down. Now, I've already got a position on SPY via SPXU, so I wasn't going to add anything extra to that. Those are going out till where is that position at? I think I have some for this Friday, and I have some for later on next month. Why does it always choose this awful brown color? I need Occam's in here to teach me how to set my defaults up in TradingView. Well, anyway, here's SPXU, and the movement on this is just so beautiful.
I think I want to try to day trade a little Tesla right now. SPY might be getting a bounce. I already filled that gap fill, so it might get a little quick bounce in and out. 15 minutes tops.
Tops.
I've got to try to convert UTD to my candles.
Waiting on confirmation.
I switched and I'll never go back.
Hey, Demon, you still going over stock tickers?
I haven't been going over too many of them. Which one did you want to look at?
Actually, you don't even have to look at it. I'm just curious about what your thoughts are for Mullen in the long term. Just your thoughts. I don't care about what it's doing now, fundamentally.
You're just inviting chaos, aren't you? I see. All right. Okay. Yeah. I guess I got to get it out of the way. David Mickery is one sketchy dude. And I'm not going to touch Mullen anymore. So I'm just going to say it. I'm out of Mullen permanently.
That's fair. I just haven't been on it.
Yeah. The right now the screw up with Delpac is what really set me off. So I went and I looked into Delpac. They are a very small logistics operation out of Indiana. They've been in business for less than 2 years. They do not have nearly the money to give anyone what David Mickery was claiming they were willing to pay for those vans. Like, not even close. They had maybe enough cash to get on loan to buy like 5 vans. Like, they could go with like Dodge Ram or Mercedes Sprinters or something like that. They were not ever going to be in a position to buy those vans like Mullen made in their statement. So that was a huge pump that they tried to pull, and they succeeded, and it immediately dumped after that. And you know what? I have decided that Mickery is using retail as a pump and dump to get his shares out of his hands and continuously dilute on shareholders. I have decided that Mickery is sketchy. This is the 3rd time that he has made definitive statements of big sales of their vans that never came to fruition. I do not trust them anymore. I am out, and I'm not touching it. Ever. I'm never touching that stock again. So nobody ask me. I'm not going to do TA on it. I am not taking a position long or short, and that is it. That was the last time that I was going to be willing to entertain a maybe on Mullen. I was sketched out by it before, and I know I was the first one to call it out when it was getting screwed with by market makers. That was different. Fundamentally, the company had no reason to be getting targeted the way that it did. And the moves down were definitely because of bad financing. And I felt like a market maker was preying on that company for that reason. After looking into them more, finding out more, and seeing how they diluted on shareholders the way they did, immediately put them on my shit list. So me taking a trade for a short squeeze that targets market makers that are over leveraged is very different from a value play based on fundamentals. And I don't think Mullen has the fundamentals anymore. I think that they are honestly very much a Ponzi scheme. It just looks that way to me. It looks like a Ponzi scheme. So I'm staying away.
Spy is dumping.
Spy's dumping.
My
ooh.
Yeah.
Ooh. Dang. Holy crap.
Say it for me, Mr. Boulay. Say it for me.
Bye bye spy.
Bye spy. Wow.
Thank you, True Demon.
You are so welcome.
I heard the van news and I just wasn't sure. I've been really busy. My fiance just had surgery, so I haven't had time to do DD. But
hey,
thank you for
good.
that.
Hey, that's all good. That's all good, homie. No problem.
I heard about the vans. I'm like, bullish? Is this bullish? Thank you for explaining that to me. Now I know.
Yeah, no problem. I'm just staying away. You know, whatever else goes on with the company, you know, whatever. I'm just gonna stay away.
My puts were down like 60% earlier. Now they're about to start printing, bro. Wow, what a turnaround! This is crazy. 5% more and I'll start printing. Damn. Don't turn me into a bear, please.
I also got my ledger this morning, and I'm super excited. Sorry.
Oh, you got a ledger? Very nice.
The Nano X, it is so fucking nice out of the box. I just opened it. I just don't trust Coinbase enough, man. I just want to move my crypto out of there as fast as possible. So now I'm going to fuck with that tomorrow morning.
Man, if SPXU prints going on till Friday, that would just make my day. Wow, Jim Cramer comes through right on. Thank you, Jim. Wow.
Hey, TD, if I'm looking at SPY puts, how far out should I get? You know, I don't know whether I should go a week, 2 weeks, or 3 weeks.
Well, I can't really tell you what to do, but
And I'm not asking
with
that,
the
but what I'm really trying to figure out is how do you figure out what the best position for yourself is? Because I know that there's a difference in time and things like that. You know, so sometimes it's cheaper to buy a put that's closer with a shorter expiration, right?
yeah.
Then I have to pay the premium for one that's further out.
Yeah, I got you. I hear where you're coming from. Okay, so the way that I decide how to select a strike and an expiration is there's a few factors. Some people use max pain, but it's hard to get that data. It's really hard to calculate. And figuring out the difference between the underlying security's current traded price and where max pain is at, and then I try to follow max pain. You can also do you can also sell spreads and stuff like that. Like if you think that max pain is like pretty far away, you can sell a spread at the money and then cap your risk and then let the premium get eaten away, and then you buy back your spread for a lower price once it starts drifting towards max pain. If you're talking about strictly buying puts, this is what I would do is look at the overall market. We got some hot mics going on.
I don't know what.
I got it. It was
Thanks,
Vinny.
Oh, Vinny. Poor Vinny. Okay. So let's go ahead and start drawing this up. So right now, the big thing that I'm looking at with SPY is this gigundous bear flag right here. And it's been trending in a down market for some time. As a matter of fact, the SPY has been forming a broadening wedge to the downside. In the current market that we've got, I think that the SPY has a long way to fall right now. And at any point, the SPY could capitulate. We haven't seen the big market flush out that people talk about when you're talking about a giant market sell-off. And we've got to see that first. But we don't know when that's going to be, so it could be at any point. So my thinking is that if you're targeting that big market sell-off, the more time you give yourself, the better. And any time this year is probably not enough time for me to feel safe if you're betting on that giant market flush out. So if you can give yourself until middle of next year, like June, for those really far out puts that you like if you want to find that perfect strike price that's like it's $1 per share on the put and you're going far out of the money, far out expiration to give yourself a lot of time, I would be looking for at least March of next year. If you're trying to get something that's closer and you're trying to time swings, I give myself at least 30 days. SPY, that's hard to do because those are really expensive contracts. So part of my strategy is to also look at leverage and take advantage of leveraged ETFs that track the SPY, but add leverage to it and have smaller prices. You're able to get that contract for a much cheaper price. And that gives you the advantage of being able to go very far away on your expirations, but giving yourself plenty of time. The downside to it is that there's drift in addition to theta, and drift on ETFs can lower the value of the equity over time, even on a even if the market is trending in your favor. If it's not trending in your favor fast enough, then you can still lose a little money to drift. So you wouldn't make as much as you would if you had just bought the puts outright from SPY, but you can still get access to those distant strikes and expirations for a much cheaper premium. You understand what I'm saying?
Yeah, that makes sense. Yeah,
So
because I've been going back and forth because like sometimes I'll buy them with a shorter expiration just because they're cheaper for me to afford, versus paying the premium to have 2 months out, 3 months out. So that's how I've been kind of tweaking my plays, and then at the same time, I'm not looking for that dump. I'm looking for something I can hold for 3 or 4 days, make a few bucks, turn and burn, and not burn a day trade.
I got you. Well, then in that case, I would give myself 2 weeks for the ones that I want to be like my high confidence play. Give yourself a lot of time so that you give yourself time for that confidence play. 2 weeks for a big SPY movement is good, because even this big bull run here has been going on for like 30 days, and it's not the biggest run that we've had, but there's been opportunities that you could have swung these. So like if you had gotten in here, giving yourself 2 weeks on this play, you could have cashed out twice on this and given yourself at least something, right? So not the greatest movement. The SPY moved down by like let's see, it was like 4.5%, we'll say. And that took this first move, that took 4 days. The next move would have taken you 17 days. So yeah, I'd say that 14 days is the sweet spot, and then take your profit on that first big move of volatility. I also have been taking the opportunity of watching the VIX and seeing when the VIX spikes significantly, and watch to see if the VIX starts coming down. When I see the VIX start to retrace, that's when I know that the fear is subsiding, and you can take those profits on those puts. So you can use the VIX as kind of like a barometer to find out like what direction the SPY might be choosing next. Give yourself
Got it. Thank you so much.
an idea when to get out. Yeah, no problem. Man, I love it. SPY's already back down to 384.5. That's awesome. Where's the Excela at? I see people getting hyped. Ooh, I like it. Nice bull flag. Let me take away these sessions. We don't need these. I don't know why this showed up on my stock trading chart. This is only supposed to be for my Forex. Here we go. Excela breaking out of that bull flag nicely. Look at that. Clear breakout. Very nice. Very nice. See, this is the power of some solid due diligence. This isn't like everybody thinks that I move the market. I don't move shit. This is just my idea of a value play. You look for, honestly, like in terms of technicals, Excela looks like absolute dog shit. It looks awful. The chart is ugly as sin, all right? In terms of technicals, it's the worst chart that you've ever seen. But when you look at the underlying fundamentals and you see something like the fact that they're holding more cash on hand than the company is worth, according to the stock market's valuation, that should tell you something, and that's worth paying attention to, because that's an extreme low valuation. There's other financials that play a factor in this too, like the fact that their PE ratio is actually really good. Let me go find their statements here. See, yeah, their book value per share is pretty low on the annual, but if you go down to the quarterly, then they're negative 1.25. They're still negative just because they're holding on to net debt, but they've deferred their debt, so they're making a huge savings, and they've cut off a good portion of that debt, and they also managed to get a bunch of cash on hand from an equity offering. So they're holding on to a whole bunch of extra cash on hand, and now the company, according to the stock market or the market cap, is only like $50 million. But you see that their cash on hand is $80 million. That's like a total detachment of valuation from the market versus valuation in terms of their assets.
TD, they recently got a one contract that was worth twice their market cap. Just one contract they got. I believe it was last month.
Yeah, that was the XBP contract that they had gotten. They didn't disclose who the partner was, but the XBP, that's their transaction service. It was $136 million for a 3-year contract, from what I understand. So yeah, that was an excellent point. Yeah, look at the price to sales ratio, 0.03. That's excellent. It's not a negative. It's not a negative price to sales ratio. They have actually good sales ratio. Usually the sweet spot here is like around 20.20, and the lower it is, the better, as long as it's not negative. And you also want to see a positive but low net book to price ratio. So the book to price ratio isn't shown here, but you can just go calculate their book value versus their market price, and you'll see that it's like negative 1 point. Let me see. Let's just go calculate it. Let's just go figure out what their book value is right now. There's their debt to equity ratio, which debt to equity is pretty bad, but their debt to assets is decent. It's nearly break even. 1.19. I always forget where the book value is here. Where is this? Is it the income statement? No, it's balance sheet, right? Here it is. Book value per share. So their book value, negative 1.5. Where's my calculator? So you got to take their market value, which is 0.1. We'll just say 0.13. Divide that by their book value, which is negative 1.25. So they have a book value per share of minus 1.10. So nearly breaking even on their book value, and a low book value, a low but positive book value is good. A negative book value or a negative book to market value is bad, but it's normally like really bad when it's an extreme number, like 10 or more, because that indicates that they have far more debt than their assets and their book value. Right now, they do have more debt, but it's only a slight amount, and their earnings are improving. And those subtle nuances of their earnings improving, their revenues staying break even, but their earnings are increasing overall because they're reducing their expenses, they're cutting the fat out of the company, and they're continuing to automate and add value to the company so that they're reducing their costs, is good. It's very good. All very good signs. And they're reducing their liabilities. Their debt to assets is coming down. Their profit margins are going up. That's all good. Lots of good signs. It just looks bad on its surface right now if you only look at the snapshot of where it is currently in time. But when you take into context everything that they've done in the last 2 years, literally the worst 2 years for companies like this because of COVID, like the job market exploded. These guys do outsourcing for some of the most expensive and tedious work that can be done in white-collar job settings. These guys automate all the annoying shit that nobody wants to do in an office, and they charge a huge premium for it. That's going to have value here because, one, unemployment is going to rise in the recession. That's going to put pressure on, the big office companies. Everybody that's in New York working in those skyscrapers, they're going to still have to get all the work done that is usually handled by like the additional employees that are going to be cut out and laid off because they have no choice. Those, like all the banks are laying off people. Those are a perfect example. The banks actually need companies like Excela to outsource all of their busy work, digitizing documents, handling logistics, handling office work, and all of that stuff. That's what Excela does. And they also do that business process automation for them. So there's that additional piece of work that they can get added in with their existing clients. And they're already working with some of these banks anyway, handling their deposit transactions. So they have a working relationship with them. That puts them, they've got a foot in the door. Thoughts on BBIG? Sure, yeah. Let me go ahead and take a look at BBIG. Sure thing. Let me get a different chart up here. Bank of America. It's starting to sell off.
Die.
Thank you. I was hoping you'd do that, Pew Pew. Die, Bank of America, die. All right.
Let's go.
All right, let's look at BBIG. All right, so still barcoding like a mother. Oh my god. Ugh, it's so stupid. What the hell? What is going on?
That was a J Ruff. I'm not sure what that was. Feedback, maybe.
What in the?
Who is
doing this? Who is doing this? All right, hold on. Who is doing this? Oh, it was me. Somehow my YouTube stream got unmuted. What the hell? What is going on?
I think it's J Ruff. I'm
J-Ruff.
not sure.
J-Ruff, if that's you, stop it.
I don't think he's doing it on purpose. It happened to him before.
Okay. I'll just server mute him.
I love the echo of "stop it."
Like he's scratching.
That was freaking weird. All right. Okay. FOMC meeting is the flush. I don't know about that, but I do expect the FOMC minutes meeting to be pretty bad. All right, let's go take a look at BBIG. So right now, yeah, this thing's still barcoding like crazy. Holy crap. Trying to think of how I can't really do technical analysis on this because it's just barcoding. Like there's nothing to analyze. The one thing that I can say is that RSI is way oversold, but like it's only moved down by 2 cents. So that's not anything. Let me go look at it on the longer time frame. The one thing that I will tell you about BBIG is, at least in recent, it's broken out of this descending wedge, which is good. That's a bullish pattern. It broke out to the upside, but it kind of hit a floor at $1, which is what everybody expected. The volume is still like it's so low. There's so little volume in BBIG right now. This is the time that retail needs to be buying the stock right now, and they're just not. There's just no buying happening. The position of the company overall seems perfectly fine to me. Financially speaking, with the merger with Zash that's now planned, that's all good news for BBIG. TikTok is ready to go to court before they go get banned out of the United States. They're already banned in India for all of the same reasons that I cited in my due diligence on the Susquehanna conflict of interest. But that aside, like TikTok's just straight up dangerous, and that's BBIG's biggest competitor because ByteDance is in the same business space. They're doing social media marketing and generating ad revenue through that social media platform. So BBIG entering into that space with their app Lomotive being the second biggest name in that space, right behind TikTok. That's good. If TikTok gets banned for being an honestly extremely shady app that's, in my opinion, harvesting people's private information, I would go so far as to say as TikTok looks like malware to me, because it's definitely spyware, but it's acting like malware, because that app has the capability to download executable code and execute it on your phone. Apps should not have that. Apps should not have that. There's no legitimate reason to have that functionality, especially not for a social media platform. That's so sketchy. That's the kind of shit that I would code into my Trojan horse malware in order to, like, for my pen tests. Like, if I was doing a social engineering engagement for my clients and I needed to get access to their network and I was trying to scam somebody, I would convince them to download an application to their computer that had legitimate uses. Like, it wasn't anything as complex as a social media platform or anything like that, but it might be an update for one of their ERP programs, or it might be a Microsoft update for something, whatever. You just make something up. And it has a hidden feature called a dropper that pulls down, it downloads a binary executable code and it executes it in the background. And that's what a dropper does. It installs malware in the background with that functionality. That's exactly how I code my malware. So there's, like, as soon as you see that kind of functionality in any mobile application or whatever, like, that should, like, throw all your red flags. Like, that's fireworks, red flares, the Titanic is sinking type of shit. Like, stay the hell away from it. TikTok is the sketchiest app ever. I can't believe that people are still downloading it. But I'm a paranoid freak, so whatever. It doesn't matter. Our phones are listening to everything we say anyway. Pay attention. Pay attention to you. I'm sure that other people have been talking about this before, but my wife and I made this joke years ago. Like, we would actually, we would write down and keep track of the things that we talked about around our phone while she had her Facebook open. I hate Facebook. I don't use Facebook. But she would use Facebook all the time, and we would keep track of our conversations that we had around her phone when she was running Facebook, and we would get ads on everything. We would get ads on Google, Facebook, whatever that was linked around our conversations, and it was like, it freaked us out. And I was like, I'm never, ever, ever going to use Facebook.
Oh my God, I knew he was going to say that too. I've never had a Facebook account, don't know anything about it, and don't want to.
It's spyware to sell you shit. It's basically what it is. That's my opinion. I think
did make money off its stock.
Great. Crap. Something just happened at work. That's not good. What is going on now? I hear somebody is like, I might have to take us off of trading floor VC, because there's hot miking happening everywhere.
I'm muted.
I don't hear anything, G. I'm looking and I don't see anybody hot micing.
I don't know what it is. Maybe I'm just crazy. Anyway.
TD.
Yeah, what's up, Scrap?
Captain Insano said to tell you there was a big candle on Boyle and UNG.
Boyle and UNG. All right.
And natural gas dying.
Oh, okay. The Bloomberg Natural Gas ETF. Interesting.
He says he's looking at it on the 3-minute.
I would have expected natural gas to get more expensive with the Nord Stream news. If Nord Stream goes down, natural gas is going to get freaking expensive, bruh.
I still believe it's going to. I don't know why. If it's down now, I don't know why, but it's going to definitely go back up, in my opinion.
It's been going up over the last week. It's up about 20% since early Friday.
Yeah, and Thursday is the date for that pipeline allegedly to be done with maintenance and supposedly getting turned back on, but who knows?
Oh, yeah.
Yeah, since July 6th, the Bloomberg ETF BOIL has been up 84%. What a rip. That is impressive. All right. Oh, that's BOIL, and then what was the other one? UNG, U.S.
Yes.
Natural Gas Fund. There you go. Thank you, Captain Insano, for the heads up. Appreciate that, homie.
No news yet on natural gas. Possibly Europe news.
That could be. That's a deep red candle, man. It looks like it's getting a bounce, though. I would wait to see what the reaction is. We'll give this nice natural gas color of green. That's interesting. We'll keep an eye on it. I'm going to go check out Excela again. All right, let's see. Still flagging. Still flagging. I want to see a bounce here. I like these big wicks here on the bottom. That shows some strength. It's getting rejected down here if it touches below the 12 cent mark. I want to see this thing jump back above VWAP though. Get going. Oh, it is above VWAP. Okay. It was bouncing off of VWAP. I see it. Hey, what's up? It's the Wall Street Custodian. What's going on, my dude? Thank you so much. I've been watching a few of your videos too. I never said anything, but I watched some of your early stuff on. There was BBIG and Mullen, I think it was. I am staying away from Mullen because Mickery got really extra sketchy on me. But yeah, glad to hear you're doing good. All right, let's see.
Which is really a hard thing to do because they were sketchy in the first place, and then now they're just like, woo!
Yeah. Well, anyway, good coverage on BBIG, Custodian. Much appreciated. I'm still paying close attention to them. The barcoding is a little bit frustrating, but I'm holding long on this one, waiting it out. The big move I expect to come after a major downside spike below 98 cents. That's what I'm waiting for. Big liquidity hunting spike. Wasn't sure if you were interested in my TA, but there it is. Just by 2 cents. My unsolicited 2 cents. Very nice. Okay, so you were one of the guys that got in early on Mullen as well. Very, very big props, dude. Big props. Let's see. My big one right now is Excela at the moment. I don't know if anyone else has seen if anyone in your group has seen my coverage of Excela, but this one, it is a squeeze play, but it isn't. It has a lot of fundamental value, and I think it's severely undervalued. You can check out my Reddit research that I published on Twitter. If you want to just go back in my tweets, you can check out some of that due diligence. I like to get second opinions from everybody, so would absolutely love yours. Hey, if you got, I see that we got 170 people watching right now, which is absolutely awesome. If you're new here, you haven't been here before, please smash the like button. We really appreciate it if you help out in getting the algorithm to appreciate us and like us just as much as you do. That helps bring more people in here, gets more attention on the plays that we're calling out. It lets everybody know what we're seeing and give everybody access to the education that we're trying to put on offer. Hey, Garrett, thank you very much. Yeah, Redbox was a monster. I actually cannot take credit for Redbox. That was Cadude, who he'll stop by and give us some awesome due diligence on some of his plays as well, pretty regularly. But yeah, that was his call out, and it was an excellent one. Probably started one of the biggest moves on retail side since AMC and GameStop. That thing moved like crazy. Let me see. All right, Excela is starting to. Let's see this consolidation. I need to get a different indicator on here and see what see what this is doing. The MACD is starting to relax and come down. It's nice. The MACD is consolidating down while the price is moving sideways. This is good. Good consolidation. The STC is red on a flat move. Also very good. STC and the MACD are pretty much the same thing. The MACD, I think, gives more information. The STC indicator is simplified. I like to use the STC to just give myself like an at-a-glance view of what the momentum is doing, like whether it's swinging up, swinging down, whatever. But I like the MACD to let me know just how soon the move is about to occur.
You got your trading view alert that just went off for Baidu, dipping into deep liquidity pool below $1.15 to 105.
Ooh, nice. Thanks, Boule. Much appreciated. Let's see. Ooh, is Apple suffering? I hope my puts are printing. I haven't looked at my Apple puts. All right. Yeah. This is what I was waiting for. Big drop into a liquidity pool for VDU. Visionary Education Technology Holdings Group. I wasn't sure that I was going to take any positions in this one. I just had, it was called out to me and I put some alerts on it just to check it out. So we'll do that now. Consolidation on some downward price movement. Interesting. Very interesting. The MACD is spiking through the slow line. Such low volume, though. Such low volume. I forget, is this company a Chinese company? They were posting nice profit margins. I will be less convinced if it's actually a Oh, Canada. Okay, it's a Canadian company. I love Canadian companies. Headquartered in Markham, Canada. All right. I'm going to continue to keep an eye on this one. that liquidity dump right here does have my attention. We'll come back to that later. Let's go watch the SPY burn. Bye-bye, SPY. Look at that. I want to see the SPY cutting right through its 200 period moving average on the hour. It's got to get about, it's got to drop another 50 basis points to get there, 40 basis points. What else do we have going on? RGS dumped. That's rough. Oh, man. It's cutting through liquidity pools. Yeah, it's moving down on this head and shoulders pattern. It cut right through it. RGS looks bearish. Okay, let's get back to Excela. 5-minute chart. RGS is a hair salon chain that wasn't profitable before COVID. Okay. Thanks, Todd. I don't want to check my Apple puts. Ooh. Maybe I'll check my Apple puts. Maybe I'll check my Apple puts. I want to see myself winning something. They're still down. They got until August. So it's not the worst. I was expecting Apple, honestly, to capitulate. And then I later found out that Apple is one of the last companies on the SPY to retreat and capitulate during a market downturn. And I was like, well, rip my puts. Of course, it had already been on a run since then, so. Will Rev ever come back to life? I'll cover Revlon because I've been looking at this one for a while. The barcoding is annoying, I understand, but like this takes patience. Swing trades like this take patience. Notice that I've got a. Well, I'll show you here. I have a paper trade in Revlon. It's been at this price level for a while. I caught this dip down here and bought into it, and it's been hovering above, but it just ain't doing much. It just ain't doing much. But this consolidation is good for it. The consolidation is good for it. And look at the RSI. On the 30-minute, you got all these hidden bulls and a bullish divergence right here from the price going lower and the RSI ripping higher. That's all a good sign. It is having trouble breaking above 55 on the RSI. So this consolidation, it will take some time, but just let it play out. I haven't seen any reason to panic yet. It's a little annoying, and especially if you have calls, you have theta eating away at you, that's upsetting. But, if you are patient, set your alerts on this trading range. You got plenty of time. Set alerts on this trading range to the up and to the downside, and when you see it breaking down below, if it bounces, you can go ahead and buy a few more calls at a discount, and if it breaks out above, then you can put your cash into this position and add on and catch the run. But I don't expect Revlon to start running like crazy until it breaks well above $6.15. It's got to break out above this level. The trading range is a little bit frustrating, as ranges often are in swing trades. Trading chop is not good for a swing trader. That's a day trader's game.
Looks like Zell's going to take another swing at it.
Is it really? Ooh, 1270. Let's do it. I want to see this thing break 13 cents. There we go. I like these deep wicks. Need the volume. Need the volume. All right. Hey, I did already look at T2. It's just consolidating right now. You got to give it time. These are swing trades. It dropped down below 14 cents, which was lower than I was expecting it to go. I was expecting it only to get to I was only expecting it to drop to 14.50, but that's okay. That's a nice low swing, and they have some good news coming out. Well, nothing that I say on this channel is financial advice of any kind, but I do want to emphasize that the call options on this are extremely dangerous. Call options are very likely to expire out of the money. This is a swing trade to catch some momentum and pull like a 200, 300% profit as this thing breaks out to like, 25, 30 cents. This was not intended to grab like a multi-bagger with options. Those options are likely going to expire out of the money. But a nice swing like so, definitely in the realm of possibility. You have this big gap that it has to fill here up to 19 cents. And that would be a 35% move. You can catch these swings here for some nice, tidy profits. They posted their FDA news. They got some nice volume coming into the stock here on the 8th and the 11th of July. All good signs. Just wait it out. Any interest in BKSY? I'm not really covering too many. I'm not covering too many different ones. And it's choppy. It's just really choppy. I see the move that it made, but looking at the income statement, their profit margins are deeply recessing. Interesting that they posted one profitable one in Q4 and then a really unprofitable one in Q1. Geospatial intelligence, imagery, and related data analytic products and service submission systems. Are they doing rocket science? They are doing rocket science. I'm getting some bad feedback. Riven? That's Rivian, right? Yeah. They had a nice move. Still trading in a range. I'm kind of staying away from EV though, just because it's very expensive and they need a lot of financing. And right now, financing is not good. It's a bad financing environment. Yeah, I'm gonna pass. There we go. Excela. Do it. 13 cents. Let's go. STC indicator is going green now on the 10-minute. 5-minute is probably going to be up. Yep, still red. Here it is. Need to get a nice big breakout on this candle. Do I think that Excela can hold its gains? Yes. Why would I be buying Excela if I didn't think it was going to go up? Why would I buy it if I didn't think it was going to go up?
Promotional use only.
I just like my cheap thrills. I like the adrenaline rush of watching the stock do nothing. I'm sorry. I'm sorry. It was just a funny question. Yeah. Excela, I do think will not only hold its gains. I think that it will. I think that in the short term, upside potential could at least go several. I think that it could go. I have to phrase this in a way that it's not setting price targets, because that's what everybody's going to say is that I set a price target, and I do not set price targets. In the short term, Excela has potential to break its current trading trend, and I see upside for between 200 and 300% in the near term. Do I think that it will break above $1 in a week? No, probably not. That's unlikely. Unless the company does something phenomenally unexpected, like saying, hey, we just landed this $1 billion contract and we're buying back half of our company's stock. Like, if they did that, then congratulations, y'all. We just loaded up on rocket fuel for the moon. But, barring something like that happening, Excela is making, slow creeping moves back up. It's shown strength. It's reversing nicely. There's good news that's been hitting this thing repeatedly, catalyzing a reversal. And if there's enough interest from the broader market, this is a very little known stock. It's really small, but these guys have huge business. They have a lot of business. So they do work for some of the biggest banks in America and some internationally. Like they do work for the top 10 global banks, according to their, PR statements, which I would hope are truthful. But this is an American company based out of Irving, Texas, so they are held to a higher standard. It's not like they don't exist in China, and that's not to knock all Chinese companies, but let's just be honest, there's a lot of them that have gotten away with some serious bullshit, all right? And there's no recourse for those companies. So if some company in China say that tells everybody that they're selling several $1 billion in coffee, and in actuality they've lost billions of dollars in costs, there's no recourse. I'm looking at you, Lucan Coffee. That was my worst bet ever. I lost everything on Looking Coffee because it was a Ponzi scheme. Cooking their books. They cooked their books. And then they locked out trading in the shares, and it fell by 90%. It was the greatest rug pull in the history of rug pulls. The worst Chinese IPO I ever got involved in, and I swore off of Chinese stocks ever since. I've broken that promise to myself many times since then. Naomi Valdez. I'm not going to talk about Mullen anymore. I'm sorry. The company is too sketchy, and I don't believe a word their CEO says. I'm not touching them anymore. Go LMNOP. That was the greatest meme that ever occurred. Let's go check out the broader markets. What's SPY doing right now?
Getting ready for its next leg down, looks like.
That would be lovely. Let's go see it. Let's go watch it happen. Total capitulation. Ooh. 383.
I only need 2% more for my refund on the spot put.
Yeah, that's a lot of feedback.
Yeah, Boulay, you're You got a lot of feedback coming through your mic.
Apple does not look healthy down here either. It could drag the SPY down for.
That is what I was counting
Is that
on
any better?
last week. I was hoping that Apple would just collapse the other week. But nope.
Somebody said Apple had bad news. I didn't look at it.
I hope Apple has bad news. My puts are going to love it.
I definitely want to know if any of our people out there are watching puts in the order for Excela. Just let me know so I can check it out on the level 2.
I just like to watch the world burn. I have a beef with Apple for no other reason than I feel like they are an overpriced Linux OS. They took a Unix operating system and put a $2,000 premium on the hardware that they install it on. And they have a toddler GUI. That's right.
Is that any better, Pew Pew, or am I still jacked up? You know, Discord.
Oh, you good, man. You good.
All right. Well, I came in just in time for the Excela push. It broke the. It looks like it's trying to break right here. Trying to break that little flag or something.
Is Nicola gonna do anything?
13 cents.
Nicola got rug pulled. Come on, you can do it, Nicola. Break over. Go find your center.
Excellent.
There we go. There's Excela breaking out. Let me go get my quadrant chart up. I need to watch too many things at once. All right, we got the Dow. Let me get SPY up here.
XELA 1313. Hell's trading floor. Let's go.
Just to throw that out there, anybody who's watching YouTube, if you look under the settings, the quality, if you can click the quality, it will say the 1080p 60 or the 720, because I know there's some people saying it is like real blurry. You can change that because it automatically puts it on the lowest setting based on the speed of your device. Got a little tongue-tied there. Put the doobie down.
I just picked it up.
All right. Ooh, you know what I see? Do you know what I see?
Please tell us.
I see a cup and handle. I see the cup and handle.
My
Excela,
SPY puts are up.
Excela
Go
is
ahead.
cupping.
Hell
That's
yeah.
beautiful.
Scaramouche.
Now we got Queen.
Clint Beastwood.
I had to stop there. I didn't have to spell Scaramouche.
Hey, real quick, just let me throw it out there. I'm gonna give a shout out to our people in the Discord right now. Got Savvy Trading, ATL UTD fan, Baba Slow, Baloney Man, Benny Legends, Better Than Gold, BG Landley, Big Head Don, Bobski, Captain Robot Insano, Carpet Crumb, Chandagger, Charlie Hayes, Mr. Chef Pew Pew, Chris SD, Clint Beastwood, D-Ray, Doobie Wah 420, Get Smarter, Intentional Rich, J Brown, Jester 555, Joe Soccer 95, J Ruff, Joey Numbaz, Layman's, Mo Herbert, Mr. Head, Numb Scully, Okie Street, Auto Codes. Woo, we got a packed house. Preds 54, Prox GT, Rizzler, Sarah B, Scrap Queen, Sir Metalbeard, Persephone, the narrator, Tom Bentley, Tommy, Tony Spawn, the man himself, the legend, True Demon, Unicorn P, Yakov, Zarkert, Zuski, Zuman, and General Disarray. I just gotta say thank y'all for joining every day. I appreciate y'all's consistency whenever y'all hit Discord up. Loyalty goes a long way. Really appreciate it. That's off to you, my friend.
Thanks for all the shout outs. All right. Excela is moving 13.19, bouncing off of another level of resistance. The next area of resistance here, the big one, is going to be at 1360. 0.136. This is the next area of resistance based on our whoa, look at that candle. Where did that come from? That was a big buy. That was a big buy order. What was that? That was a 1 million shares on a minute candle. All right.
Wow.
All right.
Moving, Jack.
Look at Excela.
Okay,
go.
so which one of you whales was that? That was one of you guys. I know it was.
Holy crap.
I told y'all to let us know so we could watch it on the level 2s.
That's amazing. Ah, man, I wish that TradingView had a level 2 order book. I would love that so much. Wow, somebody smacked the ass big time.
Captain is saying, no, he said he just bought in. That was him. One day, my friend. One day.
All right. Man, Excela is moving. Excela is
Hell's
moving.
Trading Fun coming soon.
All right. If y'all haven't heard, Excela is I haven't even told y'all the best part. I got to tell you the best part. I was looking at IBKR margin levels for Excela. Margin requirements for short positions on Excela are 2,500%. That's 25 times the amount of collateral necessary to short Excela as it is to go long. Margin maintenance on Excela is huge.
Huge.
That's a bad sign for shorts because for those of you who do not trade on margin, the concept of margin is that you need to borrow against your equity in your portfolio in order to go short on a stock, or in order to bet with margin. Margin is when you borrow the cash from a bank, right? Or your broker in this case. So if your margin requirement states that you need to have 1x margin or 100% margin, that means that in order to borrow against the stock, in order to go long or short, doesn't matter. If your margin is 100%, then you need to have at least 100% available cash or equivalent equity value in your portfolio to take the position. So if you have $100 worth of stock in your account and you do not have any additional cash, then your maintenance requirement says that you can take a 100% position against the margin of your account, and that would utilize the maximum amount of your margin. They usually don't let you borrow that much against your equity, but just for the sake of whole numbers, that's what I'm going with. So in the case of Excela, if you wanted to do the same thing, in order to go long on Excela, you would need to have $100 of collateral in your account. But to go short on it, you would need to have 25 times the notional value of your cost basis to go short on Excela. So if you wanted to go short $100, it would cost you $2,500 in your maintenance margin. And that's why this can suddenly squeeze on shorts, because that maintenance margin is so expensive. It's so expensive. Shorts that have been getting into Excela and hitting it and hammering it down, if this thing goes against them for even a short while, that maintenance margin is going to eat away at their portfolio's value. And if any of them are over leveraged, this can start liquidating shit in their portfolio overnight. Most of the time, the broker will give you up to 5 business days, but usually 2 business days to post additional margin capital, that's to deposit cash, or to sell equity in order to get cash value in your account in order to sustain your position. The only other option, they liquidate your shit. So if they don't, if this starts continuing to rip higher and higher, then Excela can go nuts. But that's not the best part. Allow me just 5 seconds. This is so anticlimactic. I got to pull up my Ortex data. Let there be short data. So Excela notice the number. Oh my God, I didn't even look at this yesterday. Look at the borrowed shares on Excela today. 3.7 million borrowed shares in Excela. Look at how much the short interest has been going up ever since Excela broke down below 50 cents. This is where it broke below 50 cents. The amount of shorts that added to their positions ever since then has been going up, just absolutely skyrocketing. Now, I grant you that Excela has been over diluting. Okay, that's a problem. They shouldn't have been doing that. That was bad. But I hope that they have learned the error of their ways. And if miraculously the price can continue to go up and they choose to buy back stock and continue to put pressure on the shorts that have been hammering and hammering and hammering on this stock, if they start fighting back, then shorts can get themselves into some serious trouble right now. Currently, their float is roughly like 450 million shares, thereabouts. There's 60 million, there's up to 60 million that are currently shorted against this thing, but Ortex is estimating, a nice middle ground of 51.4 million shares sold short. Free float on loan currently is about 11.3% or 48 million shares on loan. Now, the on loan that just got taken out today adds an additional 3.7 million to that figure. So that's quite a significant jump. The on loan estimates for Excela are going up rapidly, and the security lending volume on it has been extremely high for a long time. So we can pretty much be assured that shorts have been still hammering on this thing nonstop. Now, what I find interesting is that the utilization has gone down rapidly. So I'm expecting to find out that they've been rehypothecating shares on Excela. We probably won't find that out for a long time from now. But if market makers, broker-dealers, and lenders have been rehypothecating shares, then that means that there are naked shares that have been diluted onto this stock. And I'm sure that they thought that it wouldn't be noticed just because they've already been diluting. And this is speculation on my part, so I want to, make that clear. But since we're just, put the tinfoil hat on for a minute, if they've been rehypothecating shares of Excela in order to drive the stock down to the point where it can delist, and just try to make as much money as possible on the way down, then this can backfire and whiplash shorts out of their positions really fast. The days to cover have also been going down. That's because of the increasing volume for the most part. The 3-month average, it was at about 1.6 days to cover before. But on loan at the moment is at 0.23. So currently there's sufficient volume for all of the shorts to cover at the moment. But I'm wondering how many of them are actually getting... I'm wondering if this is just retail, just FOMOing into this thing. And if that's the case, then I'm pretty excited. So this is only half of the formula. All right. This is only the first bit. It looks like they're starting to push it back down. Stay above 13 cents. I believe in you, Excela. You can do this. I have faith in you. All right, so now let's get the next thing. So let's get the live options on Excela and find out How many options are sitting out on Excela right now? Whoo, buddy. So this is the this is the options chain for Excela. So at $1, Excela has, let's see. We'll just have to go ahead and add all these up. 22660 plus 19957 or 75, excuse me. 11260 2318. Okay, so 112,674 call options are currently outstanding for Excela. You multiply that by 100 and you get 11.26 million shares thereabouts. That's the amount of shares that are sitting on the call chain for $1 strike. Now, what happens if Excela at any point just breaks above $1 or approaches $1, then this has to be hedged for. So if market makers are holding on to this position as a naked call, as naked calls, then all of these have to be hedged for overnight, and this is going to cause, this can cause an explosive move to happen just because market makers that sold a bunch of options that then sold the shares because they didn't need to hedge the position anymore and are able to, collect the premium. They didn't think they would need to recover those shares at any point, so they most likely sold them, and these calls would then therefore be sitting as naked calls on the call chain. If Excela goes up, back up to I'd say 80, 90 cents, that would put it at risk. So the market maker will need to buy back those shares in order to make sure that all of these are hedged for. So it's about 2.5% of their outstanding shares, thereabouts. So that's quite a lot of shares to cover just all of a sudden. Now, the thing is that the call chain is so cheap right now that you can buy those. You can still buy those for, let's see, what is it? Let me go pull up my Webull, and we'll go look at Excela because Webull has really good live data. Yeah, yep. You can still buy the $1 strikes for January 2024 for $7. They were $6 a piece. Now you can buy it for $7. So they've gone up by 1 cent per share, $1 per contract. But yeah, you can get these contracts for $7 a piece. I'm not saying that you should do that. That's not the greatest idea, just because if you throw all that money into those options and this doesn't play out and Excela just for whatever reason they delist, then you won't be able to get out of those options. You'll be stuck with them. It'll become illiquid overnight after a delisting. So that would not be the greatest situation. And on top of that, the chances of it getting above $1 would basically be eliminated. So that risk is still there. I don't want people to just think that it can't happen. But that possibility exists. So, keep that in mind. Okay, Excela, what are you doing? Don't you form a head and shoulders on me. Don't do it. All right. So they were all willing to buy all the way up here, but they aren't willing to buy down here. Come on, step in. We're the bulls. Look at all of this momentum. How much has this been trading today? Wow. Yeah, the volume in Excela has been consistent today. See, this is the power that retail has. This is what I'm talking about. Hey, Scrap, I see your request on Box D, or rather, just pointing out a cup and handle. I'll go take a look at it. AMC, why? AMC, why? All right. Box D. I'm not trading Box D. Well, I don't know about a cup and handle, but I guess yeah, yeah, you're right. It is a cup and handle. I'm looking at it on the 15-minute chart. It's a really big intraday cup and handle, but give it a nice little twirl for flair. So as I was saying with Excela, the danger with those deep expiring options is that, well, they could go worthless. But on the other hand, one, they're leaps. Two, they're so cheap. $6 or $7 for an option that's expiring that far away is pretty powerful. The other thing is that, and retail probably doesn't know this for the most part, is that Excela, or well, any stock, those strikes need to be hedged for by market makers that sell them naked all at once, because when those strikes go in the money, the market maker doesn't decide like, okay, here's the likelihood of those staying in the money. No, they hedge for them immediately. When they are at risk of going in the money, they delta hedge their positions for all of the strike prices going out to all visible expirations that they have positions held in. So if they sold naked calls for this Friday, or if they sold naked calls for 2 years from now, it doesn't matter. They're going to buy shares to hedge those regardless, no matter what happens, because it's their goal to stay net neutral and make sure that they are hedging their positions out to all expirations, and they do that to minimize their risk. But if they're still selling those call options right now, then you can keep buying them. You could continue buying Excela calls for $1 strike for $6, $7, or whatever. You can keep buying them and continuously increasing the lever by which Excela can run. That increases the leverage, because when the market maker continuously selling those naked calls, they are increasing their exposure constantly. And if they need to delta hedge at any point, well, then they no longer need to delta hedge by whatever it is, like 100,000 or 2 million shares. They now, like, suddenly, if the call chain grows up to the point where like there's 100,000 call options that they sold for $6 a piece, which is so cheap, and suddenly Excela becomes worth $1, and those are not expiring for another 2 years, well, they need to hedge those immediately. So if between now and, the next like 6 months, if retail continuously is buying those distant calls, those really far away January 2024s for the $1 strike, and it levers up the call chain significantly, then it can create a supply crisis. This happened once before on one other stock that I had called out, called SPRT. It's now GREE Holdings, which I hate, by the way. GREE sucks. Those snakes. But in any case, with SPRT, what had happened was in August and September, the call chain got so over leveraged that there were more calls that were on the chain for that expiration than there were shares in existence. So there was a point, a very brief point, where 120% of the stock's outstanding shares were in the money on the call chain. And when those expired in the money on Friday, August 20th, the very next 2 weeks, SPRT went ballistic because of all the failures to deliver that it had created, and all of the market makers, the broker dealers, and people who had sold those calls naked were all fighting each other to get the shares for delivery. And guess who gets precedence, right? The market makers and the broker dealers. They get precedence because they have the fastest execution. So they drove the price up massively. Everybody else who had sold calls naked on SPRT got screwed, and they had to wait 2 days for settlement. And it drove the price up to $56 per share. It was incredible. It went from $8 just 2 weeks previously all the way up to $56 at the highest point. And it was because of that massive over leveraging. The same thing can happen with any stock. It can happen at any time because there's nothing to stop the market makers from continuously selling options no matter what. Like, they can keep selling these derivatives, and they will continue to do that. They'll just keep selling these derivatives nonstop in order to collect that premium with the expectation that, like, oh, it's like so far away that won't go in the money. But then all of a sudden, like, okay, we need to hedge. But if there's not enough shares to buy, there's not enough shares in existence to hedge, then that becomes a supply crisis. So Excela could have that happen. That I'm not saying that it's a certainty. I'm not saying that it's likely, but I'm saying it's possible. The same thing can happen. The problem with Excela is that it's a very large float. A very large float. So in order to make this happen, in order to make it happen, their current outstanding shares are at, all right, it's 425.8 million. So I was a little bit off of my figure. Sorry, I was going off of memory. All right, so 425.8 million. If you divide that by 100, you need 4,258,000 call options on the chain. That's how much it would take. All right. And currently, based on their selling price, you have to spend $7 a pop. That would cost about a little less than $30 million. So that's what it would take to actually buy that many call options for that possibility to exist. And currently there's, well, let's see. That's let me just quickly write this figure down. $298 million. And then the actual number, this is how many shares there were. On the call chain right now. Divided by 298 million. So currently about 4.8% of the float right now is on the call chain across the $1 strike price. So we would need to do this in order for this to be possible. You would need to increase these numbers by more than 30 times. You would have to multiply the number of call options on this chain 30 times in order to create that supply crisis. So the likelihood that that happens is very unlikely. It's almost irrelevant. But it has happened before. It's more likely to happen on low float stocks. Now, one possibility where this could happen that I think is feasible is if you already had a very large call option chain and then Excela, the company, bought back stock and reduced its float significantly in order to get above its listing requirements, that could cause a squeeze like that. That is what could cause it. Because right now they have enough cash on hand to buy back the whole company twice over. They've got cash sitting in the bank that they could use to buy stock back with, and they have a new financing deal with PNC Bank that gave them enough cash runway to keep operating no problem for another 2 years, and that adds to their cash on hand. So that gives them a pretty big advantage, and they could use that money to go buy back stock. And if they did that at the opportune time, if they just timed it just right, waited for that call chain to get ridiculous, wait for the shorts to keep piling in, and wait for the price to get to just that right, that right amount. I'd say that if Excela gets back to 25 cents and then they announce a buyback and they buy back like a few $1,000,000, or I'd say they need to buy back about 20% of their stock, and that would be enough. That would do it. There's rough numbers. I don't have exact math in front of me, but it doesn't take a lot of money. It doesn't take a lot of incentive. When you say that the company is buying back 20% of its stock outstanding, then that would be enough to get investors convinced that they are content with their position and that they have faith in their company. All right, let's see. Excela is, oh man, this setup is so nice. It's so beautiful. I just want this thing to keep running. It's bouncing off of VWAP so nicely. CDC says cruise ship COVID protocol no longer in effect. RCL and ticker CCL. Ah, thanks, Insano. I'm going to start calling you the news robot. Senate to hold first procedural vote on Tuesday on legislation, to ease semiconductor shortage. I did see that. So it looks like the Senate and the House are they are most likely going to agree to incentivize semiconductor companies to start setting up operations here in the U.S. I was hoping that they would do this because honestly, there's way too much semiconductor production happening over in Taiwan. And it is kind of it's honestly a national security risk because Taiwan, I don't know how much people pay attention to these geopolitical events. But the climate right now is China wants to go to war with Taiwan because they want Taiwan. That's basically the summary. I think that China wants Taiwan real bad. Let me go check up with work. I think that I've got a few messages coming in. I got to make sure that looks like I'm going to need to set up a meeting later on today. Okay, there we go. Cool. Just making sure that I'm taking care of my usual obligations. Wow, Excela is about to pass all-time highest daily volume in its history. It needs to pass 666 million. All right, yeah, let's do it. Let's get Excela up to 666 million shares traded. Hell yeah. Hell yeah. We're so close. We're so close. 666 million shares traded in a day. Let's go. That would be amazing. If Excela traded 666 million shares and closed at exactly that number, I would die. That would just be too damn funny.
Hell yeah.
Hey, I'm sorry, Chad. I had my Ortex up and I forgot that I had I had chat over there on that same browser window. Let me switch over my OBS so that I've got my chat doc set up here. There you are. There you are, chat. All right. Man, I want to see the SPY gap down to 300. I'm calling for the capitulation of the market. That would actually be really bad. I honestly, like, part of me hopes that I am wrong about the market just totally collapsing, because it's much easier to thrive in a bullish market than it is to just be a perma bear. I don't like being a bear. Honestly, being a bear feels difficult and it wears on my psyche. I'm not a very good devil, honestly. It makes me feel all like icky inside. This has been an exciting power hour, I gotta say. Die Spy. Box D's looking strong. It's moving the same way that Mullen, or God, I almost said Mullen. It's moving the same way that Excela is. Nice big strong moves. Let me put my smooth moving averages up here. Yeah, yeah. See, that tells me the full picture. If you're wondering what all these indicators are, I'll show you them one at a time. The easiest one to explain is the HTF liquidity indicator. HTF liquidity is just showing it's basically showing support and resistance, but specifically it's showing the lowest and the highest support and resistance from the current price. And it's showing it on daily, which is these really thin lines, and it's showing it on weekly, what the highs and lows are. The highs are green, the lows are red. And what these are meant to represent is liquidity pools. Liquidity pools are an area where investors have a lot of stop orders and limit orders. So there's a lot of liquidity, air quote, in that area. So that is an area where institutional investors can load up by dipping into those areas where there's zones of demand and supply, soak up all those orders, and then use that to fill their orders to either go long or short. And when they dip into these areas of red, they are basically filling up orders, triggering stop losses to go long, and then shoot the price up in the opposite direction. And when they go reach up into these areas of green, then they are loading up sell orders to dump their shares and then send the price falling back down. The idea with liquidity pools is that you're trying to guess when a market maker is, or a broker, it doesn't matter, just big institution, is loading up for a move. And what you'll see happening is the price, like, drifting. And then all of a sudden you'll get this deep spike that goes well below this area. It causes a bunch of people's stop orders to get triggered, and then the institution loads up. The price spikes back up to where it was before, and then it takes off, right? So that's the idea of using liquidity pools. As opposed to like when the price just goes up and then breaks out and then continues going up, that's just a breakout, right? So I use the HTF liquidity indicator for that to figure out when institutions are hitting that significant area. And based on what the candles do, if I see a big, deep wicking candle that dives down into a liquidity pool and then quickly recovers, then I know that means I should go long and I should trade with the institution, as opposed to FOMOing or panicking out of my positions. I use that as my entry point. The next one is my smooth moving averages indicator, which is called the ARTI, or the Phoenix. The Phoenix is just a combination of indicators that shows a momentum indicator in the middle between these moving averages. Green means that the price is ripping up, red means that it's trending down. And on the white solid line, you have the 20 period, the green is the 50 period, and the red is the 200 period smoothed moving averages. I've actually been meaning to switch over to using exponential moving averages more, but it still works for me. My point of using smooth moving averages is that it shows a very nice, clear trend, and I know how to position myself so that I'm trading with the trend. And what I've consistently noticed with these stocks is that when they start going on trend, they'll bounce off the 20 EMA or the 20 smooth moving average and keep going. And then if I want to like buy a dip, if I'm looking for a dip buy opportunity, I wait for it to crack down below the 50 period moving average and then get get more from that. If I see it like do a nice wicking candle into the 50 period moving average, that's an opportunity to get a big position and then catch that reversal move back to the upside. Kind of helps me with trading those moments of big volatility. And then the last one I have is VWAP, which is just VWAP. VWAP is the volume weighted average price, and that tells me where the price is traded on average based on the volume of the day. And as you can see, the VWAP is pretty low, so trading above the VWAP, very bullish. That lets you know that most investors that have invested today are in the green. What do I think that GME stock split will do to shorts? It's probably not going to do much on its surface, but I think that it will probably attract a lot more retail investors as GME gets cheaper. And I think that the dividend will be very enticing to existing shareholders. So overall, it'll be good. Indirectly, it will probably hurt shorts. Directly, doesn't do anything to them. It's not going to affect them or their positions at all whatsoever. But I do think that it will increase confidence in GameStop overall, and that is good for longs, bad for shorts. Poor Hoot Money. I imagine he must be pissed about GMVD. That CEO, that dude is a piece of shit. That dude is such an asshole. I don't care if I get demonetized. That dude's a dirtbag. He lied. He lied to his face. He lied on record. Like, man, you want to label yourself in front of your entire shareholder base as a total piece of shit scumbag, lying dirtbag? That's how you do it. You go on YouTube with a fintech personality. You tell them one thing, and then 2 weeks later, you do the absolute opposite and go back on your word. That is how you label yourself as a dirtbag. That CEO will never be trusted again. His name will be mud forever. I feel so bad for Hoot Money. He got lied to so bad. And honestly, I feel lied to and cheated about that too. Like, I can't believe that happened. I'm talking about the CEO of GMVD. The dude promised that there was no dilution plan for the entire year. And as soon as the price got up above 98 cents, he immediately reduced the warrant price for his existing shareholders, his institutional shareholders. He reduced their warrant exercise price to like 84 cents or something, basically gave them a 16% discount from the underlying, and they were immediately able to sell out from under retail and made every one of the retail longs that were long on that stock bag holders instantly. And he did it with a lie. He planned this. The CEO planned this. Honestly, like if this dude was walking down the streets of New York, somebody would kick his ass. Somebody would just pull him into an alley, whoop his ass, and leave him lying against a dumpster for that kind of shit. That is scumbag shit. You cannot do that to people. That dude lied on air.
With the cactus stuck in his ass.
That is not a threat, by the way. That is just speculation of how New Yorkers are. I love New York, by the way. It's a very fun city. Very dangerous. Taxis will try to kill you. Don't cross the street except on a red light. And even then, you're taking a chance. I almost got killed in New York traveling just because I tried to cross the street and I didn't know that you only had 3 seconds to cross. Like, you have to get across the street freaking quick, man. And as soon as that thing turned red, those taxis, they didn't even wait. They just vroom right past me. And I had to like run out of the street. I was like, holy shit. Green energy plays. I like the idea of green energy, honestly. My big one would be solar. Solar power is solid. My main reason for that is that solar power doesn't depend on anything except for semiconductors. The danger is that we have a lithium and a semiconductor shortage, so there's probably going to be some serious drift for the cost basis of actually producing solar panels. But other than that, like solar energy, like that, you can easily set up solar farms in like Nevada and other desert areas, and there's going to be incentive to do that. Like green energy is going to be in high demand. The climate summit was not good, and I think that finally people are taking climate change very seriously. IDEX. I was in an IDEX call position up until last Friday that expired worthless. If they're up now, I'll be so mad. Okay, they still would have expired worthless. Like if IDEX had suddenly squeezed out of nowhere the day after my calls expired, I probably would have flipped my desk. I would have been mad. It's probably still going to rip anyway. Is it 666 million on Excela? Is it really? Is it really? Is it really? Ah, it is. It is. This is an amazing moment. No, it went away too quickly. Damn it. I was going to screenshot it.
Yep.
I was going to screenshot it. Did somebody get a screenshot of it? Please tell me. If somebody got a screenshot of that 666 million volume on Excela, I would be so forever grateful. That was an opportunity missed.
Look at Mr. Boulay on the spot in Discord. He's got it for
Oh
you.
my God, are you serious?
Yes, sir.
Boulay, I love you. Thank you, Boulay. That's perfect. That's perfect. Mr. Boulay coming in clutch. What a tweet-worthy moment. Excela had 666 million shares traded on the day.
Spy wants to try and print a green candle. Silly spy.
Thank you, Mr. Boulay, for that clutch screen cap. That was amazing. I was too early in my Apple calls, but man, I think that it could happen. I do think that it could happen. Oh wow, Apple, you look sick. I hate Apple products, by the way. I don't say that just because I am short on the stock. I hate Apple as a company, and I hate their product. I am a Linux diehard. And that doesn't automatically mean I'm long on Microsoft either. I hate Microsoft as a company too. I don't discriminate. I hate all of the big hardware companies. I don't let that affect my trading. I just don't like the product. Oh wow. What a day. What a day. What a day. Excela. It's so beautiful. Man. Honestly, I don't think Excela wants to slow down. I think it could keep going. I think it wants to keep moving. But this nice slow grind upward is very good. Very good for the stock. This is a nice slow grind upward. I really appreciate this. You know what? For a penny stock, can't ask for much more. Nice slow grind to the upside. And if that sounds dirty, it probably is. It is a lovely, lovely day. What a power hour. What a lovely power hour. Hey, just a reminder, if you guys have been watching the stream, that means you must be enjoying it. So why don't you hit the like button and get some more people in here and let everybody know how awesome the crowd is here at Hell's Trading Floor. And if you're interested, you can join our Discord, which is $3 a month for our trader membership. And you get access for free to a whole bunch of bots, which can help with your trading and give you details on flow data. We have access to Options Fanbot, Stockbot, Unusual Whales Bot, Tiblio Bot, and we also give all of our members screen caps on our ScourgeBot tool. You just have to ask somebody in the Discord. We're happy to provide you with some fresh data from ScourgeBot and also Ortex. And we've also got some affiliate links with Ortex, Tiblio, and TradingView if you want to help support the channel and give yourself access to some pretty nifty tools while you're at it. You can check the link in the description for how to get access to those discounts and help out the channel.
I threw the link in chat too if y'all want to check it out.
Much appreciated, Boule. Let's go check out what the VIX is doing. I just saw that call out from Persephone about the VIX skyrocketing. Ooh, hello. Man, the VIX is... This could be really bad for the SPY. The volatility index, which reads fear, a lot of people call it the fear index. This thing could print some big scary spikes if it gets moving like this. The SPY is showing a lot of unhealthiness today. Let's see what happens. Let's see what happens. See, this is what should have happened last week. This is what should have happened last week. Honestly. What are options trading on VIX, just out of curiosity? Because right now the market is looking really ill. Oh man, it's been so long since I have actually... It's been so long since I've used Webull, because I don't trade with this platform anymore, that I don't remember... I don't actually remember how to look at the options data. Here we go. It's in here somewhere.
Zell's gonna get a nice little push into close.
Yeah.
Yeah.
All right, here we go. Okay. Yeah, the VIX is... Oof, oof, oof.
Pew pew, how are your puts looking?
Oh, they're doing pretty well here. Oh, let's see. They are up 80%.
Mine are up 30.
Nice.
Yes, sir.
81.87. I got 15 of them.
Oh.
Oh man. Oh man.
Die, spy, die. Why do you think I've been saying die, spy, die all day?
Jesus.
It's all a lie.
Yes, he belongs on the trading floor for sure.
Yep, for sure.
Yeah, that's why I said when I did it, please don't follow me. Please don't follow me.
Well, we're talking about it on Friday. Like the last 10 minutes before the market closed, everybody was talking about the puts. I was like, you know what? I don't ever do puts. Let's do it.
Let's do it.
And I was down 65%. Now I'm up 30. It's insane, bro. But I got into the 25th, so.
Yep, same. Yeah, I'm gonna hold on to it overnight. I think the SPY is not healthy.
Yeah, SPY is definitely not healthy.
It touched the top of that little channel and came right back down, and it's gonna touch the bottom of that descending channel that it's in.
How much you want to bet the FOMC minutes meeting is going to signal the death knell of the entire market?
Ah, yes, the FOMC is going to come up and he's going to say, yeah, well, you know, the 75, yeah, we're probably going to have to do 90. And yeah, we're officially in a recession because nobody said it. We all know we are. We all know we're in a recession right now.
I don't think they're going to say it. I think they're still not going to say it. I think they're going to avoid saying the R word for as long as possible.
Somebody knows something's coming looking at the SPY. Bye-bye, SPY.
See the R word.
Fucking hell. Fucking hell. I got a few messages from Hoop Money. Yeah.
Yeah,
Hoop Money's pissed.
I bet.
Dude. That dirty motherfucker. You know what? Fuck him. Fuck him. Fuck that dude. That was the dirtiest shit.
Let it out.
Man. That snake is so dirty. That dude just incurred the wrath of millions of investors. You think that the shorting was bad before, man. Oh man, you ain't seen nothing yet.
So does anybody have right off the top of their head how much the SPY went down the last time that old Crim Jamer decided to ring the bell? Because it's down 1.05%.
And we had a large gain pre-market that we had to beat.
Yeah, it's true. From yesterday's close, it is down 107 basis points.
Strikes again.
Oh, yes.
This fucking guy.
Jim Cramer coming in clutch. Oh, God. Thank you, Jim. Thank you. The inverse
ETF.
Cramer index. Oh, my God. Never doubt it. The inverse Cramer index will give you promise of 30% gains year over year.
Yep, he gave me I'm at my SPY puts are at 94% up. So thank you, Jim.
Wow. My paper trade, is it going to execute today? Is it going to hit take profit today? Oh, please say yes. If this thing cracks through 380.66. Let's see. Does it hit take profit today? Will it happen? Will it
Casual
happen?
Fool, thank you. Last time it fell, the Nasdaq fell 2%. The last time Kramer rang the bell. What's the Nasdaq doing?
XELA intraday high.
The SQs are up 3%. The short Qs are up 3.2% today.
Jeez.
That's amazing.
Nasdaq
Dude.
down 1%, 1 point, same as SPY.
Oh man. Dude. Oh, wow. There's 12 minutes left in the day today. All it has to do is break below 380.65 for my paper trade call out from this morning to execute, take profit. Like late trade, still a late trade, and it might hit take profit today. Do it. Die, SPY. Die. Just hold the pillow over its face.
You see what you
We're having entirely too much fun.
Hey, you know, it hit the top of that channel. What was it to do but go down?
Right? Look at that. Like, you can't argue. You can't argue with the technicals. It has to go down.
No. Logic and facts. Logic and facts.
Yeah. GMVD, that CEO lied. Like, y'all, I'm telling you what, this is not financial advice, but you could just short the shit out of GMVD and then go put that video, just take that video clip, send it to NBC, CNN, Fox Business, all of them. Send it to all of them. That dude will be put on blast for everybody in the world to laugh at how much of a dumb fuck he is for saying that shit in public, making a definitive statement of no dilution, no dilution, no dilution. He said it and then immediately diluted. 2 weeks later, he rugged everybody. Absolutely. You are totally correct. You could put that story out to CNN. They will print it today.
Isn't the country founded in the Middle East?
The country founded.
Sorry, the company. The company.
I thought the company was founded in. I thought the company was founded in Australia. I thought it was Australia based.
XELA going for 14. 1370.
Oh, Excela, go.
Flag
I believe in you.
That's straight bullish, bro.
Dude.
All kinds of nice, beautiful
I want to watch the SPY die. It looks like it's going to bounce. It barely missed take profit. Look at how close it came. Oh, it missed it by how? It missed it by what?
1 penny.
Wow, it missed it by a penny. It missed my take profit by 1 penny. You know what? That's okay. That's okay. That's okay. It missed my take profit by 1 penny on that candle. That's funny, hilarious. Though. That's funny, though. It'll hit it in after hours. It'll hit it after hours. Bro, 1 penny. How's that for an on-target take profit, though, right?
Yeah. The technicals.
The technicals were on my side. If this candle doesn't engulf, though, SPY's coming down in after hours. This 10-minute candle is not going to engulf. It's trying, God bless it, but no, it's not going to happen. The VIX is looking like it's going to go ballistic tomorrow. Oh, wow. What a day. All right. Excela, let's catch up with you for the end of the day. We're going to watch Excela going into close on the 1-minute chart. We're going to make this exciting. I wish I had 1-second charts. That would make it even more ridiculous.
The tick.
Yeah, do it on the tick.
TV Captain Insano said the last time that Jim Cramer did the market, it was March in 2020 and the Dow dropped. He posted in chat.
He did it right as we were going into COVID. Oh, wow. All right. You got day traders taking profit on Excela, so this isn't going to close above 14, but it's still a great day for it. Look at that move. Look at that move it made today. There's a cup and handle for you. There's a cup and handle. Big cup handle. And yet another one. Cup handle. What a move. What a move. Let's see how it does. Let's see how it does. Excela, I have faith in. This is actually really, wow, it's actually holding up nicely. I was expecting it to come down harder than this. I was expecting it to drop back to 13 cents, but it's just holding up. It doesn't want to retreat. Bro.
Zella said,
Nope. If it holds up above 13 cents, that's big. That's huge. That's a 35% day, man. Oh, 30% day. My bad. It'll be 30%. I'm looking at the number on my. Yeah, it's a good day. 30% in a day? Are you kidding me? It's amazing. Let me see. From close to where it's currently, if it's 13, yeah, 30%. Really close. If it closes above 1350, though, 35%. Is it going to make a run for 14 cents?
Ooh, damn, it's going to move.
Excela.
Did somebody in chat say they just bought 700,000 shares?
Are you serious? Hello.
No,
Look at the whale.
It looks Russian or something.
1390.
Wow. Look at Excela go. Dude. Tell me this company doesn't want to do a buyback now. I was trying to email their investor desk. They never got back to me. I tried to email them. They said that they were going to call me, and then they didn't. They tried to call me one time, and I missed their call because I was in a work meeting. I tried to call them back, but it was a restricted number, so I couldn't. And they never dialed me back. I've sent them a couple emails since then. They just haven't got back to me. So I don't know what the deal is, but well, anyway. Your calls are up 124%. Wait, Clint, what did you get? That's not on that's really on Excela? How can that be though? The Januaries didn't even move.
TD, just shout out your phone number. I'll give you a call.
555-4123.
Last 5-minute candle of the day. Let's go. 14 cents.
I sold BBIG shares and bought 350,000 shares. I hope it works. Kid, are you serious?
I got the March $1
I'll go. Hey, Flintster, I'll check out. We're going to watch Excela going into close, and then I'll check out REV. Liquidity hunt is if it get that HTF liquidity indicator on your charts and see if it dips below, like significantly below that level of support and recovers within 5 to 10 candles. Okay. That's your clue that it's a liquidity hunt. If it breaks below and it stays below for more than 10 candles, that's not a liquidity hunt. That's a breakout. Wow, Excela. You make me so
at 9 cents the other day.
Excela, you make me so proud. $700,000 Excela. Wow, dude. I wouldn't. I will. I'm. You're a brave soul. You are a brave soul. I have conviction in this play, but I will never bet. I will never bet like $50,000-$70,000 on a penny stock, no matter how convinced I am that it's going to be great. You are a brave soul, sir. Or ma'am. I won't assume your gender. Hoot is a guest speaker. If Hoot wants to come in here, man, I'll talk to him. I'll offer up some of that. You know, we'll commiserate together. I'm sure he's pissed. I'm sure he's so pissed. If anybody's in Hoot's stream, let him know. He can just come on over. He can just drop on by on HTF. Just let him know that he's got to add me on. He's got to add me as a friend on Discord, and I'll send him an invite so that he can come on in here. I feel so bad. I feel so bad. That was such garbage. I honestly can't believe that happened.
Did you see Clint got the March 2023's dollar calls at 3 cents? Oh, come on, Zella.
I don't know. I'll be happy if it holds up 13.5 cents.
Oh, for sure. I just wanted to see 14. That would have been nice, but we still have a whole another minute to go. We can get a push here. Another retail well, if you're listening, I'm not saying to buy, but that'd be pretty nifty.
Hey, if somebody's got if somebody has $70,000 to just throw over the fence like that, more power to you, bro. I don't have that. I don't have that kind of money. I don't have that kind of silly money. I wish.
That'd be nice, huh?
I'd solo squeeze some shit like this. I'd just look for these like, oh, looks like the market makers are over leveraged. I'm just going to buy all of your naked call options right now.
Scoop them all up.
Just scoop up all those naked call options. Oh, I see you have done fucked up, sir. Yeah, here go the day traders. Here's the day traders exiting. You guys are gonna regret it later. All right, that's a close. That's a close. Closed at exactly 1350. Exactly at 1350. That's perfect. That's totally fine.
That's a good close.
That is a good close. That is a good close. Where did we end up with volume? 738.5 million shares traded on the day and a close of 34.3% up. Wow. Dude, that's awesome. That's good a beautiful, beautiful close. Excela. See, retail has power here. There is no reason why Excela should be trading in these ranges if people just get locked in on the fundamentals and see the value that it has beneath the surface. There's a reason why I'm calling this one a diamond in the rough. Excela is covered in all of this bad news and all of these bad things happening to it and this debt that's just hanging over its head. But that's the same situation that AMC was in. AMC is a working business model that was hammered in the pandemic that survived all of that and then came out of it making acquisitions, coming up with new business processes, new additions to their profit model, adding on to their earnings constantly, reducing costs, all of it, and better and better and better outlook every single earnings. Excel is the same thing, and they're in a different business model that the world is going to rely on now in this high inflation environment, doing business and process automation. And that's a good business to be in right now. There's the layoffs, and I'm sorry for, to everybody out there that's going to, suffer in this coming recession, but Excela is not. They're going to do very positively as a direct result of it. They're in the right business for this environment. They have the right stuff to succeed in a recession. Their services will be in high demand, and they'll be able to charge a premium for all of their new clients that they're going to get once their clients start getting into a position where they need to start laying off staff and they realize, oh shit, we don't have anybody to go and do all of our busy work. What are we going to do? Like we've got to deliver to our clients. So Excela comes in and scoops it right up. Dubiwa. Come on, housing crash. DRV wants to leave the earth. I haven't checked out DRV yet today. Let's see. Ooh, that was a strong move. I didn't pay attention to this all day long today. Look at that. Wow, it all happened at the end of the day. I saw that it had sold off pre-market, but yeah, it did. It moved strongly. Wow. Wow. Where's Flabbergang?
Wow.
It just doesn't hit the same.
No.
Probably because I can't just mute you and then laugh. I can just mute Flabbergang. I pick on him too much. Wow. March 2023's. Okay. Okay. Let's go catch up with everybody. Someone was asking about Revlon. I think that was Flintster asking for Revlon. So Revlon did a little dippy dip. Could be a liquidity hunt, but it happened right at the end of the day, so you don't know. It could be, but it didn't break that level. The liquidity pool that I was paying attention to is down here at $5 flat. I'm looking for it to break $5 and then jump straight back up.
Looks like that was all the green the SPY had in it. Starting to go back down.
That's funny. I'm still staring at that 1 cent off on my take profit, and I'm a little annoyed. I'm just a little annoyed. SPY. Oh, SPY. Oh, SPY.
Sweat.
How you tease SPY.
Well, you still got time.
Yeah. Well, so far it doesn't look like Hoot has gotten my message. If anybody is watching Hoot Money stream, you can extend the invitation from me. I'm happy to commiserate with him over GMVD. I am deeply pissed for what the CEO did. It was a violation. That is a securities law violation and a breach of fiduciary duty. He made a public statement that he would not dilute and then went back on his word, and he did it so underhandedly to intentionally defraud retail investors. He is absolutely on the hook for that. That was a shit thing to do.
I think Todd and I had mentioned a few times that he is the last bag holder.
Todd is the last. What?
No, that the CEO, he is the last bag holder.
Well, he certainly will be once people sue him into oblivion for this.
I'm actually surprised that he did this because he has wording in their previous filings that if they get over a $75 million market cap, him and the whole board get millions and millions of shares.
Well, this isn't the way to do it. This is the wrong way, sir. That is the wrong way to do it. Oh, man. Wow. Excela. Such a beautiful chart. I'm typing like I'm dyslexic now.
I reached out to Hoot to let him know. I'll see if I hear back.
Okay, appreciate that. Yeah, if Hoot wants to come and commiserate here on stream, that's fine. Or we can go off stream if he doesn't want to be recorded. But I really feel well, he probably feels a lot worse because he was he actually talked to the guy, you know.
Yeah,
he spoke face to face with him, and like that's as close as you get to a e handshake, you know. And wow,
Yeah, that feeling of violation where it's like, oh, I've established this one-on-one relationship with a CEO, and just feeling like you literally lied to face on air in front of your whole audience. That's absolutely insane. It's out of control.
Yeah. Yeah, that is how you put a target on your back.
That's why that guy had that reputation when we first found this play.
Yep. I'm glad that you said something so that I wasn't surprised. I had been kind of like, I was tentative. I was like, I don't know, like, the short exempts are extremely high, and there's a lot of good cases for this company. It could recover. And then this guy's just like, nah, I'd rather have $2 million now than the trust of everybody forever. That tells everybody where your fucking priorities are. So, what is this asshole's name? I don't even know his name.
Something Yakov.
What? Jackoff?
Oh, that's perfect.
Yakov.
Yakov.
Not ours.
Samesies, I guess.
I can't. No, no, please. You can't be serious. No, it is Dr. Yakov Geva, President and CEO, medical doctor, and executive director. Wow. He will be forever known as Dr. Jackoff. That is his new name. Dr. Jackoff.
I don't know. That kind of sounds like somebody I'd like to know. Go to the Yakov doctor? What?
Chef, get out. Get out.
Do you know what Hoot's Discord name is to shoot him a friend request?
I already did. He's typing to me right now.
There you go.
I'll go make the popcorn.
All right. I think Hoot will come and hang out for a minute. We'll see how it goes. We will see how it goes. All right. Well, the invite is out, so if Hoot Money wants to come and join us, hang out in the Discord for just a hot minute, we can give him the introduction to Hell's Trading Floor. And we will, I guess, commiserate a little bit on what happened.
All right. I gave him a community guest.
Very cool. Thanks, Chef.
No worries.
All right, so Excela is getting a little bit of pressure after hours, but that's no big deal. The volume has long since died off. After hours on these, probably not going to be very liquid, so no big deal. Hell's Angels. Oh, man. All right, the other one that I need to check in on, BBIG. Wow, all right. So BBIG barcoded the whole day, did absolutely fuck all. How unsurprising. I wonder if I could scan this and get a discount on Amazon. That would be too funny. Hey, Hood, I see you here in the
Hello,
trading
hello,
floor.
hello.
How's
What's
it
up,
going,
True
homie?
Demon? How you doing?
I'm doing pretty good, dude.
Good, good. Glad to hear it. Yeah, I'm doing all right considering everything that's going on. Love to hear your thoughts on the CEO of G Medical.
I have been trash talking this guy. We have a nickname for him
Dude.
now. He's now officially Dr. Jackoff for what he. I can't believe he did this.
Dude,
like we got
it's
the
just
notice.
crazy.
We got the notice on Fintel this morning, and I was like, "Oh, a 6K filing. What's this? Did they buy new stock? No, internal private offering to what's that company's name? I forgot it already. I keep forgetting their name.
Armistice and Lind Global.
Armistice. All right, Armistice and Lind.
Yeah. So Armistice helped bring them public, and then Lind had a deal with them in December that they got bought out of, and then they had another deal in April. And Armistice has been involved pretty much with every single deal. Yeah. So there's only one deal in December with Lind, but yeah, they're pretty intertwined.
Gotcha. Oh, by the way, I need to let you know we're live on YouTube right now. I hope that's okay.
Yes.
All right, cool.
Yeah, I actually just tweeted it out.
Yeah.
Got you.
Yeah, you can hang out. You can hang out as long as you want. I'm here for like the next. I'm here for the next 20 or 30 minutes.
Cool.
But yeah, I figured that you wanted a place to come and like hang out and commiserate for a little while because I saw that it was obvious dilution, and the whole day I've been just absolutely fuming mad, red in the face. Like this guy went live on a finance influencer's YouTube channel and said to all of his retail investors, "There's no plans to dilute for how many years? 1 year? Was it this year or a year?"
He said they have no. They said he said okay. So he said that they can't dilute until $6 per share. Even when there were warrants already for $1.50 per share. So he said that they can't dilute until $6 per share. He also said that they're in a good financial position, that they don't need money. He also says that they're buying back as much stock as possible. So the buyback, they've only we saw in a filing from last week that they only used up about 15% of the buyback. And then since my interview, the float has doubled from warrant exercises. So it's like he says he's buying back the stock at these prices. It's just way too cheap. Then this happens.
Yeah.
Out of the blue.
Yeah. So for everybody who's watching, I'll go ahead and I'll pull up a copy of the filing if I can get it here on FinTwit. Could I get one of the analysts to just go ahead and send me a link because I'm looking at too many screens right now.
I've got you with the link.
Appreciate it, Hood. But yeah, the whole deal was that they had outstanding warrants, as you said, for $1.50 exercise price, and then they reduced it down to 84 cents if I'm going off of memory. So 84 cents. That's a nearly 50% reduction on the cost for those warrants. They exercised immediately and then spent the whole day dumping it on retail investors and just hammering the price down. What incentive is there for doing something like that? And like that immediately turns that CEO into a liar. Like bold-faced lied to your face on air to all of his retail investors. And the whole day I'm just thinking to myself, like, this dude just put a target on his chest for every lawyer, like every ambulance chasing lawyer.
That's what I was thinking. I don't want to bring that up personally. I don't want to be involved in like some like lawsuit behind it, but this is like got class action written all over it. I mean, he just lied in an interview to attract investors just to and whole time saying I hate short sellers. They're naked shorting our stock just so that he works with the people that are shorting it. On Friday, I sent him a long email saying how I believe that Lind Global is behind the shorting some way or another because there was 3 million failure to delivers outstanding as of June 17th. The next day, they're just all gone. On June 21st. That was also the day that the stock price hit 118. But Lind Global actually exercised 3.2 million warrants on June 17th. So it correlated directly with the failure to delivers. Then we get this with Armistice and Lind Global today, where they reduced the warrant exercise price. So I tell him on Friday that I believe that Lind Global's involved, and then we get this today. So it's just crazy to me.
Yeah. That's unbelievable. I was kind of like, I was a little bit tenuous on whether GMVD was massively overshorted or massively naked shorted, but I did see like how many short exempts there were printing on it, and it wasn't quite to the level that Mullen had gotten to, but it was very similar in terms of like the volume of it. It's just that their float, Mullen was different because the short exempt exceeded like 20% of the outstanding stock. And I was like, that's not normal. GMVD, it hadn't gotten quite to that level, but it clearly, like with the short exempts exceeding a certain percentage of the volume that was going on and just getting beaten down at a time when its utilization had been maxed out, that did make me extremely suspicious. So I was like, sure, why not? Drop in and throw my 2 cents in my technical analysis, and lo and behold, it went up to like 90 cents, touched $1 in after hours a couple times. So for me, it was like this is a decent swing trade. What kind of trade was it for you?
Yeah, it was the same thing. It was just a swing trade. We had some success with a similar not the same setup, but like a similar setup, just getting into a stock at an all-time low that's highly shorted. It was TRKA. So I had good karma with that one, and then I got into GMVD, completely different animal. It goes up 50% the first day that I get it, and then it gets rugged 50% again within the same trading day. So I knew I was facing something new at that point, and that's actually when I reached out to you. I was like, they've got to be like short exempt in this thing, and then later we find out they had like 400,000 that day. So that's when I got into it. I just thought it was just, going to be a normal squeeze play. I noticed that the week before they had like 25% of the total volume short exempted on a few days, which I thought was not normal. I'm seeing a similar thing happen with Reliance right now. It's just a stock at the all-time low, and there's just like sell volume coming out of absolutely nowhere. So I like to look for setups like that. Just see like random sell volume at an all-time low. Usually something suspicious is going on.
Right. Well, oddly enough, that's exactly what I found with Excela, and we could talk about that later if you want. But I was just I figured that this was the place to just be like, okay, it's okay. I know we lied to you, and just like kind of bring you into the fold. We've been meaning to get you in here a couple of times. And we're glad we finally were able to bring you here.
As happy to be on. Thank you.
Yeah, no problem, dude. I don't know how much you know about Hell's trading floor with the tools that we have here, but since you've been paying attention to short exempt data, it might help you to know that our Scourge bot that we have that's built here into the Discord, it's part of our / commands. We use this to actually track data on short exempts and live options data. That's available to you if you want.
Okay. Yeah. Thank you. Yeah, I'll definitely be looking at that. I've been meaning to join your Discord as well, by the way, for a little bit now.
Yeah.
I've seen the tools, and they definitely look very, very useful, especially since you can program too. Like you make it. You've got the twofer there.
I do, but I don't want to take all the credit. It's actually one of our chief devs here. His name's Flabbergank. We affectionately call him Booger. He did most of the development here on ScourgeBot, so he's provided most of the data on this. But it hooks in the FINRA data, so we get good reads on massive prints of short exempts. And there's a custom filter that you can use to search through like basically the entire market. Whatever's been heavily shorted, you can look through it and filter down the stuff that like based on its float, the volume against the float, volume of short exempts against volume of shorts or volume of total volume, and all kinds of other useful stuff. So check it out.
No, I'll definitely check it out. That's awesome.
Yeah, but anyway, we're glad to have you in here. Since we have you looked at Excela? I recently published a DD over the weekend.
Yes, so I did not get a chance to read your full Reddit DD. I see. My thing with Excela is that I always use this website called dilutiontracker.com. they just have this huge ATM that's open. So what I want to look at is what exactly like their plans is for that ATM that is open.
Right. So at the moment, the dilution is still outstanding, but right now, I don't think that that's going to be a priority for them. They recently did a stock buyback back in March. The purpose of that was to spin off a Class B stocks, which they succeeded in doing so. They put out a $1 million offer to buy back stock at $1.25 per share, and they converted those shares of stock into Class B. I think it reduced their, it did a heavy reduction on their float, which was good.
Gotcha.
Where they're currently sitting now is they're out of Nasdaq compliance, so they are going to have to make a decision here soon. They have until August 8th to either get to either appeal for an extension for 180 days, or they need to reverse split, which they already have authorization to do so. So those are the two options that they have going for them. But what really got my attention, and I don't know if you're watching the YouTube stream at the same time, I've got the call chain here on. This is part of our Scourge bot. We've got the call chain up here, and you can see how loaded up the $1 strikes are. This here collectively adds up to about 3% of their float, almost 4% of their total float. And the $1 strikes for January 2024 are only trading at between $6 and $7 per contract.
Nice. Yeah. Oh wow. Yeah, that's cheap.
Yeah.
8 cents.
Yeah. It's really cheap.
Or open interest.
And the best part is that my experience tells me that those are all naked. So when I look at all of these calls that are so far out of the money because it's trading, the stock is trading down like 85% from this strike price, there's no way that market makers are holding on to all of the shares necessary.
Not a fucking shot.
Yeah, exactly. So I've got this working theory because this is how SPRT squeezed, was because the gamma ramp was so severe with the outstanding open interest on call options that on August 20th, when SPRT ran beyond $10, it put so many calls in the money that 120% of the stock was actually in the money on the call chain. And that created a supply crisis for the market makers who had to fight each other for those shares because they didn't have any other way to cover. And the thing ran from $10 to $56 almost immediately over the course of the next 2 weeks. It was pretty wild. The failures to deliver were insane. I know. So right now, the shares that are currently outstanding on the call chain are it's heavy, but it's not a lot. But there's a lot of time and a lot of price action between here and $1. And
for sure.
And with these things trading at like $8 per contract, 8 cents a share, like that's really cheap. I did the math, and currently their market cap by the end of the day today should be at around 60 million. They currently have 82 million cash on hand. So if they wanted to, they could buy back their company. Like they could buy back the whole float. So there's a lot of surprises that can happen here. The company can make.
Yeah, that's definitely why it can be, sorry to interrupt you, but that's definitely why it definitely could be a good deep value company, because, they have a lot of debt, and if you look at their balance sheet, their income statement does look like they could be slowly like grinding down, right, with their company. But that also creates some of the best opportunities, in my opinion, because those are the companies that are going to be trading at discounts. Those are the companies that are 100% going to be trading below their fair value because that's what their financial statement says. But if there is a reason for the company to stay afloat, if there is a reason for them to have any type of shareholder value, that's when the stock price can really start rocketing because they've escaped whatever their debt crisis is, and they can continue to reward shareholders. So that's I love the deep value aspect to your analysis.
Yeah, it does have that going for it, and that's what's got me so bullish on this thing. The other thing that this is recent news, and this won't show up on their balance sheet, is they deferred $150 million of debt from short term to long term, and they got a $6 million interest savings year over year on that because they got a new securitization facility with PNC Bank, who happens to be one of their business partners as well. So a lot of people don't know what Excela does, but they do a lot of things. Their main business that's most profitable and generating about $200 million of revenue for them right now is doing payment processing and deposit transactions, which they make. I don't have the exact figure. I'm speculating it based on their revenue versus what the industry standard is, but it's somewhere in the neighborhood of 2 cents per $100 of deposits, and they're handling $1 trillion of deposits, which works out to $200 million. And they do this for the top 10 global banks in the world. So they have this huge access to the top 10 banks, and that's not even the biggest part of their business. Their original part of their business was outsourcing for task automation, for business process automation. So they take all the busy work from these big corporations that work in offices that require a lot of skilled workers that you have to pay a lot, but they do like busy work, pushing paper from one side of the building to the next, and handling digitization of documents, and writing up papers and things like that. So Excela automates all of this, and that's what they specialize in. That's where most of their business model is based around, is process automation for business processes. And that, I'm thinking, with inflation hitting everybody right now, it's causing a bunch of layoffs, and that's going to get worse as we go deeper into this incoming recession. And I do say the R word here. No warning.
I think it'll happen too.
Yeah. So they're in the right business as far as I'm concerned, and I'm just wondering, like, if you would agree with that, seeing companies that are able to automate all of these extremely tedious tasks and move it over to a totally automated system, or just outsource it outright to somebody else and have them handle all the busy work for a much cheaper alternative. And then they wouldn't have to have so much staff on hand. It saves your human resources for the more complex, business aspects.
Yeah. No, I like that. I'm definitely taking a deeper look at XELA right now. They just make so much money. Like, they make last quarter $279 million worth. I mean, it's pretty insane. They're definitely very, very leveraged. And this is just based off looking at their March financial statements. They're definitely very, very leveraged. So that means like high risk, high reward. But like you said, I mean, the moving it to long-term debt instead of short-term debt, and then the cost savings on interest payments, I really like that.
Yeah.
Really like that a lot. And that's exactly like GameStop. Like, GameStop was just also a company, like, their financial statements were pointing in one direction. There was COVID, all of that, but that's why there was an opportunity. So
yeah, and that's the kind of situation that I see here, is that they're just in that right. They're in the right business. They just have to survive this all of the obstacles that are in front of them right now, and it seems like they're getting there. It's just there's a lot of dirt being shoveled on top of them. Like, oh, this company sucks. It's got debt. It's got liabilities. Yeah. Their business model isn't growing fast enough. They haven't made money in 2 years. Blah blah blah, and all of that's getting piled and shoveled on top of them. But what nobody else is noticing is that when you look at their cash flow and you see what their earnings are quarter over quarter, is their income statement is improving, and they're reducing their costs. They're in a constant state of reducing costs, and you see their profit margin year over year has been getting narrower and narrower. And I think that now, between the new securitization facility that defers $150 million and gives them a $6 million annual savings, on top of a new contract that gives them, it's a $136 million 3-year contract for handling new payment processing and transaction for an undisclosed client, which that's pretty normal for this industry. You don't just like, tout all of your clients' businesses and what you're doing for them as a courtesy when you're doing business consulting. But that's an extremely positive move in the right direction, and that's not factored into their balance sheet so far, and that's about to be in August. So for me, like, just picking up some calls for January 2024 and sitting on a basket of shares, I could be very content doing that for I could sit on that for 2 years. Hell yeah.
This is definitely looking like it's so for you, is this a swing trade, long-term investment? Probably a swing trade considering you want that squeeze, but
I mean, if it's squeezed, then I would definitely cash out of it if the opportunity presented itself. Like if that money's right there in front of me, yeah, I'm going to take that. Cuz what's going on with this stock can cause a squeeze to happen very rapidly, and you cash out at the top and then you wait for it to come back down and, then take the long investment. But if this thing just slowly rolls up for the next several years and I see it going like $1, $2, $3 over the course of several months, just that unusual snail type movement, sloping upward and constantly posting better and better revenue, then it could become a long-term investment for me. It just depends on how the stock reacts. So I have leaps now, so it's whatever it decides to do between now and then. But we'll see how it develops. If it moves violently the way that it can in these circumstances, then easy swing trade. Take the profit that's in front of you. But if it starts making a serious amount of money and the stock continues ripping and rolling for the next several months in a row, and they keep posting those quarterly earnings, just making good news after good news after good news sustainably, I'll hold on to these guys for 2 years or more. Absolutely.
I like it. Yeah. I think $1 could easily happen in like 1 to 2 years. Not even sweating that. Again, especially if they stay afloat. I mean, 1 to 2 years, the R word, recession, probably gonna be, I don't know what's your thoughts on it, but probably at least close to being over. If they can stay afloat by then, I mean, obviously they've weathered the storm at that point and they've won. So should go back up by then.
Honestly, I think that where they currently are, they're probably going to perform better than most companies would in this environment, because if they've already got their debt securitization set up so that they're able to keep paying things off over the next several years. And right now, all of their clients are going to be depending on these guys to handle all their process automation. And those same companies that are their clients are laying off staff like crazy. Like, not everybody is saying it, but you look at Wells Fargo, JP Morgan, Bank of America, and Morgan Stanley, the layoffs are happening all over the place. And banks are these guys' biggest customer. And if they're handling their payment processing and transactions for over $1 trillion globally, then that's a foot in the door to open them up to business process automation services for all of their existing fintech clients. So they could end up establishing new big contracts, which they've already done. And I find it interesting that news came as soon as the layoffs started. So as soon as the first news, like Wells Fargo did big layoffs, and then 3 months later, Excela announces that they got this big new client that gave them a $136 million 3-year contract for business automation services and transaction handling. That it might be coincidence, sure, but I don't really believe in coincidences. So
no coincidence. The CEO didn't coincidentally, of GMED. He didn't just coincidentally sign that thing, that filing today. So
yeah, just remember his name is now Dr. Jackoff.
Dr. Jackoff, got it.
Oh wow, gosh. That dude. He will end up paying for this in some way or another. I'm not going to head up any kind of class action.
I'm not doing shit for that, dude. We don't have the. I don't have the money for that.
I don't have the money for it. I don't have the time. It's not worth it to me. But Like that dude basically just he made war with retail by making that decision to go back on a promise. Literally, was it 2 weeks? It only took 2 weeks.
I might try to get him back on my YouTube channel for a round 2 interview. I'll like soften him up before it, make him think that it's gonna be good, and then I'll just like hit him with a bunch of tough questions.
Yeah,
we'll see. He wants to talk to me about it. I emailed him. He said, let's see. He said that he wants to talk to me, and that I will understand. He was like, I will discuss it to you and you will understand.
Wow.
So
that's very direct of him.
Wait, he just responded again. He said, don't be emotional. It is only money. I said something. I said I'm a bit emotional to talk today, but let's set up a live call in the future. He said, don't be emotional. It's only money. Interesting.
Yeah. Says the guy that just took a $2 million payout.
So when his shareholders lose 90%, he's just going to write a letter to them and say, don't worry, guys. It's only money.
Yeah. Fuck you. That's what I have to say about that. Wow. What a tool. I can't. Wow. What a statement.
The Australian holders are down like over like 95% since their IPO. It's like, it's only money, guys. Don't worry.
It's only money. Wow.
What type of CEO would say that?
Obviously, he doesn't care about money. He's in the wrong business.
Whatever.
Oh, Excela just cracked 14 cents today. Woo-hoo.
Let's go.
All right. Well, thanks for stopping by, Hood. It was good to talk to you. We'll have to do this stuff more often. I'm going to try and get back into a more stable streaming schedule.
Of course. I hope you have a good day. Best of luck with XELA. I'll try to get in on it. Yeah, good stuff. I'll check out StorageBot too.
Yeah, go ahead and try it out. We've got a few spam channels. You can just check it out and see how it works for you.
Awesome.
If you need any tips, get a hold of me. I shot you a friend request. This is Call Me Dr. Fudd from Twitter.
Oh, gotcha. Thank you, Mr. Fudd.
All right.
Yeah, no, shout out Call Me Dr. Fudd, by the way. I've been talking to him a bunch.
Toddzilla. Yeah.
He's taught me so much good stuff. So thank you so much.
Todd is one of our best analysts. We've all got some really great analysts here in Hell's Trading Floor. But yeah, Todd's always FUD busting, making sure that we're staying objective in our analysis. So yeah, definitely. Important. Huge shout out to Todd Bigsley, aka Call Me Dr. Fudd.
Shout out. All right, take it easy, everyone. Have a great day. I will talk to you later, True Demon.
All right, take it easy, Hood.
Peace out.
Peace. And with that, I think that I am also going to call it here. I got to go and catch up with work, get some more coffee and caffeine in me. And yeah, it was a good day today. I've got some more plays that I'm working on for value picks that I'll be putting out similar to Excela. But right now, Excela is on the move. I'm going to put most of my attention on this one and looking for additional information on it. Obviously, AMC did an excellent job as well. Been moving really strongly. I saw some people that were shouting about T2 as well. So I'll go ahead and put that one up here really quickly. I want to catch up with some of these other plays before I close out the stream. T2. Oh, hello. What the hell?
They got a little bit of news on a European patent.
Oh, is that a fact? Ooh, FDA granted breakthrough device designation for Lyme disease detect. Wait a minute. That was 7 days ago. Where was the new? You want to go ahead and post that in the trading?
This is yeah. Let me grab it. I had it a minute ago.
All right, much appreciated. Yeah, I'm. Well, anyway, T2 was called out. I expected it to break to 1450, and it ended up still going down even further. It got to a low point of 13 cents before it bounced, and that only happened in after hours. The worst it got during daily hours was a low of 1330. So the liquidity hump was pretty stiff on this one.
There
but
you go.
Not the worst. There we go. All right, cool. Let's take a look at this. Granted EU patent for methods for amplification in complex samples. Good news. I don't know what that means. Methods for amplification. Sounds good. Amplifying those methods.
And they got the patent for it, so it sounds unique.
That sounds good. This is why I'm not in science. This is why I just write code. I don't even write code. I just break code.
The best part.
I just break things. Let's see. All right. Well, that's really nice to see that. That's really nice to see that T2 is. It's really nice to see that T2 is moving. This is where I had actually set up the buy orders when I shouted this one out earlier. It's down still a little bit, or it got a little bit lower. I know a bunch of people were like, "What happened to T2?" It's like, relax. It's down a penny from when I talked about it. Just calm down. Everybody calm down. But it's nice to see that they're getting some good news. A nice pop above their 200 period moving average on the 10-minute. On the daily, they are still in their the deepest part of their chart. So I do like to pick ugly charts. But right now, there does seem to be at least a little bit of a possibility of a reversal happening right here. And it broke into those liquidity pools that I had talked about before. So there's a nice chance for a reversal here. This one's just a swing trade for me. Nothing too ridiculous. I'd expect like it to, turn up to like 18, 20 cents or so. It could go further than that for all I know. And for some, this may be a long-term hold. I don't know. It all depends on what your risk tolerance is. But just know that it's been well below $1 for several months. So Nasdaq listing doesn't really jive with that. They'll have to do something about that at some point. So keep an eye on this one and don't sleep on news for it. Keep your feeds live and up to date. Make sure that you are tracking this just in case that bad news suddenly hits, because these plays, they can go against you quickly in a situation where they like get delisting is happening in a week and they need to do something and it's urgent and an emergency. Stuff like that can happen. All right. So just know what you're getting yourself into playing a ticker like this. Okay. Paul Ruiz, I'm out of Mullen. I'm not touching Mullen anymore. I'm done. I'm done with Mullen. The CEO is too sketchy for me, and he has made too many bad decisions. And now, yeah, you'll have to go back to the beginning of the stream. I'm not going to talk about it twice. Yeah, who's good people? What's the plan on Excela? You can basically watch half the stream. Like the whole first half of the stream was pretty much all about Excela, covering the DD on that. You can also check out my Reddit thread that I got. You could take a look at that in order to get the full breakdown. It's very dense. There's a lot of information there. It's got everything that I have up to date on Excela's stock. Let's see, BBIG barcoded all day. I think I may have gotten like a free book off of Audible with that barcode. Box D moved like a monster today. It was a nice gain from the open. Closed at 21% up. Excela moved up 35% on the day. Revlon broke down a little bit at the end of the day, but it's okay. It's still mostly barcoding within this range. NKLA was making a run for this new area of resistance, and then broke down and sold off. So I don't know what's going on with Nikola right now. I'm gonna get back up to date on what the options market is doing. This was a flow call from Unusual Whales. We'll see what is going on later. Who else was asking about some of our tickers? I talked about AMC. We're still short Apple, which is It was really good today. It was really good today. Apple is not having a good time. I think that this could be the first move in a series of downward swings for Apple. It's been in a range and it broke down off of some serious resistance. SPY also breaking down heavily today, broke the bear flag, and I think that it's time for the SPY to start falling like a rock out of the sky. We'll see how it does when it breaks down later on in the we'll see if it breaks down later on this week. Missed my take profit by 1 frickin' cent. Oh, wait a second. Wait a second. Did it hit it? Did it hit it? Nope, missed it by a cent. DRV up on the day. Nice move. XLRE, which is another short, also moved down big time, down 1.68% from the open. Oh, actually, that is not correct. 1.7%. From yesterday's close, it is only down 1.15, but still moving in the right direction. And then you've got all of the inverse plays like SPXS. That one did well, inversing the SPY, of course. The Qs did terrible. SQs are up 2.5% today. The VIX turned around really quickly at the end of the day. And we've got a few of the other meme plays. I think that BIOR was the last one that I needed to catch up with. It's been barcoding a little bit. Barcoding a lot, actually. Trading in this range and still continuing to do so. But as I have said many times before on BIOR, I am long on that one for basically ever. That's not a promise to never sell, obviously, but it's one of my long-term hold investments. BIOR is one that I'm hanging on to for a very long time, expecting to have to hang on to it for a very long time. Talked about Revlon. Talked about that. BBIG going up? I think so, but you might have to be waiting a while. Okay. Cool. I think I caught up with everybody. Oh, all right. One more at the end of the day, Flintster. All right, fine. FFIE. Ooh, big breakdown at the end of the day. Well, you need it to bounce off of this 200 period moving average. The 1 hour, it's the 50 smooth moving average. This would be setting up a new higher low if it did bounce here, and you would end up with a very nice bullish divergence on the RSI if it did that. So if it opens high tomorrow and breaks above $7, I think you've got a good shot of a nice move to the upside, but more than likely it's going to need to consolidate here for a little while. Just a feeling, because it's setting up a trading range now and you've got this structure that's forming. It's possible that this could be liquidity hunting, but it doesn't look like it. This looks like a retracement and that it needs to make another range of consolidation here between $6.50 and $7. If it breaks $7, then that is a good sign for you. All right. All right, that's it. I'm calling it here. Thank you guys for hanging out. Really appreciate you watching the stream. Big thanks and a shout out to Hood Money for stopping by to commiserate about GMVD and Dr. Jackoff going back on his word of no dilution That was sneaky and underhanded. The statement that he would not dilute and there was no plans to dilute and that the company had plenty of money was undercut by the decision to suddenly cut the exercise price on a whole bunch of warrants and give his institutional investors a massive discount on freshly printed shares straight off the press, in direct violation of his statements made in an interview with Hoot Money just 2 weeks ago. That is a scummy, shitty thing to do. And no respect whatsoever for that decision. That's an extremely underhanded thing to do. And the fact that he emailed him and said it's only money, the fucking balls on this dude. What a set of stones. All right. Well, I gotta go before I go and get before I get even more pissed off. So I'm gonna let this one rest. We'll just let the anger marinate in my chest for a while. All right. That's going to be it for today. Thank you guys so much for hanging out on stream with me. And I'll look forward to seeing you guys next time. Until then, y'all have a good night.